It must be a big surprise. The stunning loss of the UAE, a long-standing OPEC member, could create disarray and weaken the group, which is usually shot to show.
And resistance to break would be 712.
Despite a lot of fertile disagreements.
Wow.
Triple top.
We've been talking about oil prices higher this morning. Anyway,
Yeah.
this WTI up by more than 4%, above $100.
Oh my God!
Brent crude up by 3 1/3%, up to almost $112. Up next, we have the results of CNBC's latest Fed survey showing how higher oil prices are actually impacting the economy at this point.
Oh God. I wish they were so concerned when, well, I've been over that 100,000 times. I just can't listen to their negativity this morning. I won't do it. Oh, it's only 7:30. Ah! I thought it was 8:30. Okay. And low support will be right here. I need to put a price line on there first. Right there, 704.70. Low. SCO. SCO. They're buying it. They're buying them up right now. SCO. Some big orders coming in. $7 was the all-time low. God. Forget oil at 100. Experts warn 140 is possible if Iran tensions escalate amid Strait of Hormuz. Yeah. It's better than 200 a barrel, what they've been saying, and I don't know. I don't think so. I think we just need to blow them apart. Teach them a good lesson forever. IWM's got a big old knife. It's a pretty hard sell. I don't know what to say about it. Seemed like we could get in scalping territory and scalp it. So my best strategy is one trade at a time. When we're at all-time highs and we've had that big run, one trade at a time. And I've had most of my success with the SPY and the SPX over and over and over. I haven't had a red day in a long time, a big while. I'm not stuck in stocks that can whack out on news. I come in every morning fresh, ready to start the day off. But I've always been like this. When we're markets at all-time highs, I just kind of hesitate a little bit and see what happens. I can't listen to social media. There's too many of Trump deranged syndrome out there right now, especially after a man's been almost assassinated 3 times. They just don't want that deep state messed up where they're making tons of millions of money behind the scene. I think Nancy Pelosi ended up making almost $400 million in a very short period of time. Omar made $30 million supposedly in a short period of time within a year. There's a lot of politicians out there making a ton of money right now. So it's kind of crooked. And they don't want that deep state interrupted. So I come in here every morning. I don't have a load on my back. I'm not stressed out knowing what the next day is. I sleep well at night. And just one trade at a time. Sometimes I get stuck and work it out. Sometimes I just have to just take it. But almost all the time it bounces back up, 90%, 95% of the time. And I try to buy it at the cheapest price as possible. I never buy breakouts, hardly. If we're at the high day, I ain't jumping in the trade. Tesla hit my 372 again. I've been calling this 372 out for about a week or two. We've hit it 4 different times. We broke out of the snake. We came back and touched support. AMD is a little overbought. A little. It's a lot overbought. 184 30 days ago to 357. So it's almost doubled in price in a short period of time. There's no way I want to jump in that trade right now. I'd be nuts. So I did put in a support at 310. And I'm looking for 300 to bounce off that 200, which has been repetitive for a good 3 or 4 weeks. Some guy got on CNBC this morning and was bashing Intel as everybody else was pumping Intel. It had a huge bounce off earnings. So if you're going to do a 5-day Fibonacci, first support's going to be right around 78.87. So one more dip on this thing, I think I'd probably take the trade. We got a lot of good earnings coming out this week, and it's going to prove the market wrong again. It already has. I got Bobby yesterday, and I'm hurting on it. Got a double bottom on K-Web, and a double bottom here on PDT, triple bottom on PDD for China. Watch list. NVIDIA has already almost 11 million in volume. Oracle had a huge run. And it's kind of come down some. This is looking presentable soon, if not now. We got a head and shoulder line right here. Perfect shoulder line. I'd keep an eye on this one today, Oracle. $159.17 is what I got. AMD, we already went over. Joby almost hit my support level. Marvell was in the news. Can't read that, so I got to clear it up. We got a head and shoulders. We got a double top breakout, triple top breakout at 139. We're about to hit my first support. I don't know why I put that up there, but that's where it is. 147.24. See if that's on the 10-day, 30-minute. It could be a trade today. Well, one more dip down for a solid buy at 140. Tesla is in the news. People are going to be whining about Elon's pay package, which I think he deserves. Well, Elon Musk, SpaceX pay package right out. Just a headline just come in. Well, Elon Musk, SpaceX pay package hinge on Mars colonization and orbital data centers. There you go. I mean, they're already in on it. So Wall Street, the fat cats are going to try it. They don't like Elon, although he used to be a big liberal. So the progressives are going to try to downgrade the stock when it should be upgraded. Think of the opposite. Think of a devil's advocate when you're trading the market. Amazon dipped below my support this morning. We're definitely hinging on I like this spot right here at 255. 255.50. So I'm going to set another alert. And we're definitely could see a bounce on it this morning. They were pumping Amazon big time yesterday. You got to be in the now. Remember what they were pumping the previous day. It gives you an opportunity. MU, they were pumping the crap out of MU yesterday to 600. Never take their pumps. They were all over MU yesterday. 600. I put an alert in here at 5:06:59 once they said it. I wasn't going to fall for that crap. Not when the market's up so much. Being in the now has really made me a better trader. And focus in on the devil's advocate of about everything you hear or listen to. You got to use your own judgment. Google was another big pump yesterday. So if you would have listened to him yesterday, you'd be hurting today. I didn't listen to him. We got a real strong buy at 341. Quad top breakout. $141.63. So I'm gonna set my alert right on the orb for yesterday's wick low. Would I take it there? I don't know. I look at the 10-day. We're at 321, and we run up 30 bucks. And if I look at the 90-day, 1 hour. So I'll go back 1, 2, 3, almost 4 weeks. We're at 269. So that's an $80 bounce. I'll stick with my support level. And we got PLTR had a huge run yesterday. I'm sure it had a huge run. It must have. I thought it was yesterday. Yeah, I had a big bounce yesterday. Never, you know. I called out this one yesterday, but that was before the Cleveland Cliffs signs a 3-year agreement with PLTR. California billionaire tax heads to the ballot as backers claim enough signatures. TSM TSM's had too big of a run. In 1 year, 160 all the way to 404. It's way overbought, way overbought, way overbought, way overbought, way overbought, way overbought, way overbought. They said AI is dead. I'd have to wait for 390. Well, shoot, we're at 390 right now. We've got a head and shoulders. We've got a gap. I'd wait for the 9. Nine EMA on daily. Most of the traders I know that aren't too successful are the ones that don't keep up in the now and don't get that God-fearing. You know, I have a God-fearing, and anytime I get in some kind of trouble personally, I get the fear of God. Or even sometimes the people that I want to hang with, I kind of get, you know, do I want to hang out with this dude, or is this chick trouble? So when I'm trading stocks, I have that fear of God when I see stocks that are up 300% in a year's time. Especially when they're sitting there bashing AI consistently. Mr. Called the bottom on that one. Said strong buy right around 120. So now we're up above the 100 and the 9. So I think probably right around the 2163, somewhere in here. Just triple top breakout. Right around 160. 162, right under the 100. That's a triple top breakout support level with a yin yang. That's a $9 dip. Coin, we hit resistance at the 100. So the previous support is the gap. I'm going to go to the bottom of the gap and set my alert. We're at 186.52. So that's a $10 dip. And that'll be the 50 SMA on the daily. Mark Cuban says if I was a state governor, he would leverage AI and stablecoins to bring in the money. First to market makes a killing. He's a big liberal. I don't care much for Mark Cuban. Not the way he pumped race bait in there for a bit under the Biden watch. I suggest he hire a few more white people to play basketball. Not being racist, I'm just saying. Equal opportunity. Better get a few trannies up there, play on the court with him, because he was so big into DEI. So I got a family issue right now with one of my nephews. 20 years ago, he said he asked to borrow money from me, and I don't remember it one bit. I've gave so much money to my family, but I will say that I had more trust in him to make it on his own than I have the others. Now he's holding a 20-year grudge, I just found out last week, or yesterday. I'm going, what the So I remember that when I come signing my will. I'll give him $1. I mean, it's just stupid. And people, I mean, they'll kill you for money. People will. Family members. Some kind of jealousy. We're always starting to reverse. I knew we were at a good spot. I looked at the clock and I said, "Jeez, I wish it was 8:30. I'd have been all over that." But I got to take off CNBC because I ain't going to listen to them today. And if this gets that bad too, I'll take them off. I just don't want to listen to a lot of negative stuff. It just messes my mind up. We're already approaching resistance. There's Apple. Called out Apple yesterday. In today's earnings, we got this morning we had Coca-Cola, UPS. So there's drama on UPS. We're at a support right now, but I'd like to see 97. $97. That'd be probably a good buy. And what was the other one? Oh, I got sidetracked. Where the hell did I put them earnings at? Shit. We got Corning, we got Coca-Cola. I don't buy Coca-Cola, but it's up today. This is a Warren Buffett lifetime trade. I don't see how he made money on it. And we got Spotify. They were pumping Spotify yesterday as POT, and I thought it was overbought. Yep. 412.37, and we're sitting right now at a support level. So that probably triggered. Could get a bounce off Spotify today. And General Motors. General Motors CFO, still unclear when tariff refund will be received. I don't think they should receive shit. tonight we have Robin Hood, Visa, Mondelisa. Those are the three big ones for tonight. MDLZ. And we got Sophie in the morning, SOFI, Humana. And then the big one's going to be Wednesday night. Microsoft, Amazon, Meta, Alphabet, Ford, QCOM, Chipotle, all 6, 7 of them. So that's going to be a big night, Wednesday night. Big night. That's the biggest night of the week. We got oil at the end of the week, Friday before open. They'll make a killing. We got Apple Thursday after close. And we got ConocoPhillips Thursday morning. And we got Lilly, MasterCard, Wayfair. That's just a lot of good earnings this week. Biggest week of the year so far. I'm gonna make my, oh yeah, AMD's getting close to my support. Still a little bit still overbought. $200 SMA has to break on IWM. It's funny, I don't know too many traders that trade with moving averages. I don't know if it's that hard to figure out, or it's not really that hard. Just take one glance and you know if you're at a resistance level. For example, the SPY. 200, 200, 200, 200, 200, 200 just in a 24-hour period. QQQ, 200, 200, 200, 200. IWM, 200, 200, 200. We're at the 200 on the SPX in the close yesterday. Okay. Well. Oh, Mama, I'm excited. I'm almost out of breath.
Thanksgiving rolls in like an EMA. A time to sit back, be thankful for this day. We've done our work, we made our climb. Counting wins in a special time. With every trade, with every win, we built a circle thanks to Washboardjim. Harvest of gains, we all rise. Grateful hearts, clear blue skies. Together we've grown, accounts aligned. A thankful crew, one of a kind. Oh, yeah. Stocks and laughter, two worlds collide. Who'd have thought we'd grow and hit our stride? Charts and patterns, they tell a tale. But it's the fun we have, the holy grail. Pass the pie, pass the cheer. We're thankful for this wild, good year. Trading dreams, growing strong in this community. We all belong. Harvest of gains, we all rise. Grateful hearts, clear blue skies. Together we've grown, accounts aligned. A thankful crew, one of a kind. Harvest of gains, we all rise. Grateful hearts, clear blue skies. Together we've grown, accounts aligned. A thankful crew, one of a kind.
To show right now, there's just not a lot of like dip buying appetite in this name, at least as far, maybe like I would say more so rally buying is I guess what we're seeing play out in real time. It's been an interesting morning for GM. I will be curious to see actually how we open because we are ticking ever so slightly higher again, but coming off of that substantial gain following these numbers, adjusted earnings did beat, a large beat driven by the stronger North America profitability and roughly a $500 million benefit tied to an expected U.S. tariff refund. EBITDA came in adjusted at least up 22% year over year. EBIT margins expanded to 9.7%, substantially higher than last year, showing again this solid operating leverage. They raised their full year 2026 EBIT adjusted guidance and reflected again this improved tariff assumption and better cost expectations now going forward. North America did remain the profit engine with $3.66 billion in adjusted EBIT and margins of 10.1%. That was up over 130 bips year over year. What did not go well though? Revenue was slightly below expectations, down about 1% from last year, showing limited top line growth despite strong earnings beat. Automotive operating cash flow also fell sharply to $533 million from $2.4 million a year ago, and automotive cash flow guidance for the year was reduced ever so slightly, which weighed on sentiment around capital returns and some of their balance sheet flexibility. And so investors, while focused on the quality of the earnings beat, did note that a meaningful portion was driven by this one-time accounting benefit as a result of the tariffs being better than feared, not underlying volume growth. And perhaps that's why we haven't seen more of this rally hold this morning is, yes, clearly good results, but again, will we see this necessarily reflected every quarter going forward? Big question there.
Yeah, look, and with gas being higher, there were times that people said, I'm trading my SUV, I want a smaller car. You know, as gas goes up, people like to switch. Right now, you're seeing so many of the SUVs doing so well and trucks doing so well for GM. Right now, gasoline is higher. Does the mantra change at all? I was wondering that. But the stock was up, I think, over 3% this morning, and now it's holding on to about a 0.5% gain. Thank you so much, Jenny Horn. Great to see you. Thank you. Coming up next, we have Chris Zaccarelli from Northlight Asset Management to give us a glimpse into the trading day. We hit some records yesterday for the S&P and NASDAQ. What's next for Wall Street? Opening bell. We'll be right back.
Opening bell, we'll be right back.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every sector.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Reed. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Welcome back to Opening Bell. Getting you ready for the trading day. Moments away from the bells.
I'm going to give it a little bit of time this morning.
Zaccarelli's with me, Chief Investment Officer at Northlight Asset Management. I'm so glad.
I'm going to give it a little bit of time this morning, see if we form a pattern of some sort. That's my game plan. We got a snake breakout pullback here on the SPY. We could see a double bottom, or we could go ahead. If it bell rung right now, I'd probably take the trade. I'd rather took it off the 50. So I'd wait probably for the 50 to come back again, do this head and shoulders. On the SPY, I was just like 2 minutes off right there. And then we'd have a megaphone. So the resistance would be the 200 right at opening. I'd get out of the trade with a triple top. $90% of my 95% of my trades are patterns, moving averages, and candlesticks. I'm cooking me a chip and cottage cheese. Some sort So I got me a cheese chip with cottage cheese for breakfast. 3 more minutes.
Moves, Nicole, because it's a huge week.
Got to unplug my.
As the Fed gets its feet under the desk this morning, we had the BOJ holding pat on rates overnight, and this is important because we obviously watch dollar yen very closely. We are starting to see signs of stagflation light showing up in major economies, and that is of course important as to how a lot of these central banks are trying to navigate all of that. What was interesting about the BOJ decision was that there was a 6-3 vote, so 3 dissenters actually calling for an immediate hike there over in Japan. Now look, they are on a very different path. They are looking to a path to normalization, actually hiking rates after decades of ultra-loose monetary policy. But this is really interesting because it seems to be more, as far as the analysts are concerned, about defending the yen rather than inflation. Now, they did up their inflation forecast 2.8 above the BOJ's 2% target. They actually brought down the economic growth forecast to 0.5% as well.
So we got a downward trend. Oh God, here comes the screaming.
So going to be watching that. And
I can't deal with that this morning. I'd put a stop to that if I was working that floor. So your first support's going to be 71.53. We'll see if I'm right. Somewhere in this channel. If it goes lower than that, then that will become resistance. What do I see? I see. Well, less than a minute. Yeah, right in the middle of it.
You told us about the MetaManas story, and there's a little more on it today.
Yeah, so interesting Wall Street Journal report out actually saying that Meta is going to...
Meta. She said it. Well, we opened way below where I thought we would, so let's get a trade in. Jim, you're not... Right about now. Right here. Crap. Come on. God darn it, take your sweet time. $28. Oh, gosh, they're high. They're high again. So the 7160s or the 7170s. 360. SPX calls scalping the 7170s at 360. They're going to have to shut down the wells. If they shut down the wells, that's going to be a big issue for Iran. It'd be hard to get that oil back up. Well, I can get very excited. Come on, let's break out. I'm up $40 a contract. Should have doubled down on that 360, but I did not. Okay. If you don't feel comfortable and you're in this trade, take your profit. But I'm going to hold on here. Could get out at $50. But I'm not. I'm going to see. We got inverted hammer and inverted with an engulfing candle. Pretty strong signal. IWM broke out. We broke past the 200 on the SPY. I'm at 420 now. We got the 9 as resistance. I definitely, if I'm a rookie, I'd get out now. But I'm holding on a little longer. I just want to see if we can just one more little urge up. I'm going to try to get $100 contract. We had 430. Could have got out at 430 easily. There's 430 again. 440. Anybody in this trade? Anybody in this trade? Tell me yay or nay. Nope. Okay. I'm going to say, I just want to get 60. Come on. I mean, this is the time to get out. Come on, just a little shove up. I know right when I sell it, it'll hit 460. Fake sell. Oh, we know we're on you, Jimmy. You ain't fake sell ain't gonna trick us. 450, baby. Give me 90. One more. Just a little bit. Just a little bit. Oh. Always clean this, Jim. Oh.
Hey, Jim.
Hello. Are you there?
Hey, yeah, I'm here.
Okay.
Did my guy get a hold of you yet?
No.
Okay. She said there was some other units besides 3 and 13 that needed attention, and she said to ask you about them.
They were 3 and 16, the ones that were downstairs in the exam room. Let me get out of this trade. Yeah, let me get out of this trading. You have to go upstairs into the investigator room. There's going to be a guy called Daryl up there that'll let you in the computer room. And I'll go down there in a second and find out if there's any more issues.
Well, my guy's going to get with you when he's headed over there, so I didn't know.
Okay.
I'm not sure when he's headed over that way.
It's definitely, they were complaining about the exam room and the computer room. They're both in the same area.
Okay. Well, she's acting like there was some other systems. I guess not.
I don't think there is.
All right. Well, we just wanted to make sure.
Yeah.
All right. My guy should be getting a hold of you to meet over there, so you can let him in those rooms or whatever needs to be done.
Well, I appreciate that, sir.
All right.
Okay. Thank you.
Bye-bye.
460, baby. $470. We're right at the 9. This could go higher. Like I've said before, I've seen times a whole lot worse than now. There's just too much. It's different. I don't know how to explain it. I've tried to explain it. Well, wow, 490. Bingo, baby. Jimmy! This market has given us great opportunities. I've never been so excited about a market, and I have my whole entire life in 22 years. These fat cats got it all wrong. One day they're pumping the market up for breakouts. Next day they're negative as could be. It's not good on it's not good for the psyche. Where's it 650 now? I mean, I could have made. Definitely at a resistance level now. I'd rather buy the market on a good dip than on a breakout. We just now hit the hard resistance. If you're in trades, it's going to be a little tougher because you're taking the pain at all-time highs. But if you're come in here with an open fist instead of a closed one, oh boy. We got to go down there and see if there's any more issues. Now we're squeezing, we're between the 9 and the 21, so we're still bullish, but if we go below the 9, we're no longer bullish. And we'll come back to the wick and retest that wick. 10-4. And that'll be your second trade. And I gotta get this building right. And people, behind the scenes, I'm under a lot of stress. Especially with government employees. Many of them have to go back to work instead of work from home and have a leisure love life of doing nothing and working at a snail's pace. Now they're being monitored again. They have to go back to work, and they don't like that. Because this went on for almost 5 years, where they were collecting $120,000 a year and working from home and not getting their job done. So they got to come back to work, and a lot of people had pets, and they bought houses out in the country, and now they got to drive this long distance to go to work. And all they do is bitch, bitch, bitch. And there's nothing like it was before Biden. They got these big salary increases once Biden took office, printed all that money for them. Create the alert. Tesla had a nice little breakout right off the support level at 472.02. See all these opportunities. Jimmy mentioned a triple bottom here on Amazon. We had a double bottom on AMD. The market really doesn't care about a lot of this crap they've been whining about. I've seen times a whole lot worse in the 22 years that I've traded. I can think of 4 or 5 different times. This ranks up number 6, maybe 7, just because of social media itself. I got a great example. So Trump's an outsider. He comes in and he tries to destroy the deep state. I moved to Hawaii. I was an outsider in a warehouse of 300 employees. I was told to go in there and clean house. So the first day on the job, I'm surrounded by all these huge Samoans and Asian people. And the boss says, almost first words out of his mouth, "Jim's here to fire anybody he wants." And I'm going, what the? What you set me up in? Yeah, I didn't want to hear that. I told the guy, I said I wanted to work here about 3 months and get to know everybody before. So right at the bat, day one, they all look at me like, who the hell does this guy think he is? Coming in on my turf, an outsider that doesn't even never lived in Hawaii. So the first thing I do is I hire a vet, a white man, only because I felt like, I'm going to get me a vet. This guy has experience and I can't get no one else in here to get in the job, to take the job. So I hired him. I had a companion, but everybody there ended up accepting me. I was polite. But at first it wasn't very easy. And I didn't fire nobody. I wasn't going to fire nobody. I wasn't going to fire these people. So I had this one guy I worked with. He was Asian, and he was Vietnamese. And he had a grudge against America because of the Vietnam War. And they came over and occupied Hawaii, made it a base, and became a state. So I had to deal with that guy. And he was right, I was sending the picture frames to him. So him and I were always, he's always giving me crap. And one day I just told him to fuck off. I said, fuck you. He stopped off and got mad and told the boss. And the boss brought us in there, and the boss looked at me and said, "Jim, do you feel like you want to fire him?" He's sitting there right next to me. He says, "If you do, you got to take his job." I said, "No, I don't want to fire him. I just want to be able to work in peace." Whatever I did would never make him happy, even if it was the perfect miter. So here we're coming back to support. Then we're back at 360. So Jimmy's getting ready to take another trade. 350, hit 360. $3.30. We got a hammer. I say Jimmy Kimmel's got to go. I mean, that wasn't a joke. $285. You can get out even if you want. Come on, baby. Break. It's probably one time I should have added on, but I didn't. I just stood there. We got a tweezer bottom with a hammer. I'm going to go down. Taking her sweet time to get there. General Motors is pulled back like Jimmy said. Okay, we got the snake breakout pullback. I'm adding on right here. $2.65. We got a triple bottom. Triple bottom with a wick, higher low. Right now I'm green. Was. Getting a little far out of the money right now. It's got to hold here. There's a lot of bears out there, I'm telling you, that are they're calling like a 2008 pullback, 2007. I believe we're overbought, but times are a lot different than they were back then. I'm still horrified back then because of what I saw, but we had we didn't have so many new highs. We had a lot of new lows for a long period of time, for months. But we didn't all, we really started printing the liquidity back then. We could have got out even again. I kind of got this on my mind, so I got to leave here soon. If I go below this line, I'm going to get out of it. Right now, I'm snake set up. Keep posting higher lows here. I've got a hammer and a spinning top with a little bit bigger wick on the bottom, and a hammer, inverted hammer, inverted hammer. Three white soldiers. Could be a breakout lead there. If not, I sell it here and take the small loss. But I'm not going to do it. I'm going to put on my uniform and get the hell out of here after we break. Run up and do a double top. Helping reading them candles can really change your attitude about if you want to stay in a stock or all that's bullish. Every one of them. I should get out while I'm up because I ain't gonna. It could dip on me again. I'll get stuck and have to deal with them idiots down there. I'm stressed out with these employees. I mean, if you don't put out the red carpet, they're not happy. There's 340. Now I'm looking good, so I'm going to sell this thing with three white soldiers. There's 360. Thank you very much. I'm out. 350. It's trade number 2. Both of them have been pretty good. Okay, I'm going.
Came back and tested it twice to start off today's session. Some buyers have stepped in. That's our initial area of support when you're looking at the options flow for this morning. And if we're actually able to recover, you're looking at 71.75, which was pretty much the highs that we saw from yesterday. Now, if you're going to break down 7100 is a key area of support. We break below 7100, that's when we will see an acceleration of selling pressure in this market. Every single day we have seen, obviously, a lot more bullish activity, and individuals continue to roll up higher and higher when it comes to their put protection. But if we do see maybe some geopolitical risk or maybe some of this AI risk coming back into the market, a lot of that gamma structure when it comes to the put side can get accelerated to the downside here.
Yesterday they were gloating.
We also don't
Today they're down on the dumps.
that we saw last week, which is pretty much sitting at
So I can't swing trades. Too many mixed messages.
7150 to the upside. That range, if we continue to stay within that range or get back into it, kind of leads to a rolling over of a lot of these oscillators, which could put, once again, more selling pressure into the market.
Yeah, I know a lot of traders have been pointing out that the narrowness of the market still remains an issue, particularly when you look at the record close yesterday. I mean, you take a look at the stocks that were at all-time highs, it was only 15 compared to 40 last week or something. So this is obviously a big topic of conversation. Hey, KG, thanks so much for running us through some of those stories for us this morning. Coming up, we will take a look at the big picture and go deeper into the impact of the structural market themes of the Iran war. Morning Trade Live is back after this.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. General Motors down after reporting earnings and raising its full-year guidance. The company beat first quarter earnings expectations thanks to a $500 million benefit from the Supreme Court striking down of the Trump administration's tariffs. The company's board declaring a quarterly cash dividend of 18 cents per share, payable June 18 to shareholders. It's currently trading down 3.9% right now at 74 bucks and change. Let's take a look at some of the other movers and shakers today. We've had a lot of blue chip earnings, as we mentioned. Coke's been out as well. There it is. Coca-Cola up 5.5% right now off the back of its report card. We've got Centene up 5.5%, Franklin Resources up 3%, CVS up 2.8% right now. Let's flip the boards and take a look at some of the laggards on the session. As we mentioned, a pretty earnings heavy kind of week with about 2,100 or so companies reporting. So we do have a number of names here, like Alexandria Real Estate down 11% right now, Pentair down 9%. And here are the rest in the vicinity of about 7 and 7.5%. So there's a quick snapshot of what is moving and shaking in these markets this morning. A lot of moving parts, keeping an eye on the Iran war, keeping an eye on the tech theme. A lot of central bank action this
Here we go
week.
for
A lot
triple
of those
bottom.
to get through as well. So let's talk about some of
Quad
these.
bottom.
Johnny Day, who's the head of global.
Okay, this is the last chance for the breakout. I'd go in small on this one here, and if it didn't hold, I'd automatically get right back out. But this could be the leap we need to go to a new high. I'm not going to be trade here, so I got to leave. You got a serious situation to work on. We had a real bad storm last night. A lot of wind, high wind. Leaves were everywhere. I seen the tree trucks down, but I ain't heard of any tornadoes or anything. I had one up on my property 2 days ago. Knocked a few trees down. So I got to. So I'm going to get out of here and go do this.
Oil prices, there's a permanent risk premium in oil of about 30-35%. That's
I would
bound
trade
to
this
have
trade
an
if I
impact on
didn't have to
growth,
go.
demand destruction at some point, and inflation expectations. And it also is having an impact on volatility. Regular volatility is high and elevated. It's not supremely high, but it's high and elevated. And you see the downside protection skew both in oil markets, people still positioning for higher prices, and equities, people still positioning for tail risk. So these are the immediate forces that have now been imprinted on the world we inherited before that, so to say.
Where are you seeing that degree of concern, though? Because it looks like investors globally are largely looking past the sort of stagflationary or stagflation-like type situation we could be looking at. I mean, we heard from the BOJ last night, who sort of talked about that, higher inflation forecast, lower economic growth forecast as well. But look, I mean, US equities continue to climb to all-time highs. Look at Japan, look at South Korea, look at Taiwan. You and I have spoken about those markets before. What is going on? I mean, what does this mean for asset allocation right now?
I think we really like to say the word that we are in a world where there is a new set of defensive. Meaning, traditionally, whenever there is any risk-off period, you have the staples and the healthcare doing well. That is not what is happening right now. The new defensives are these large-cap tech names with their huge balance sheets, quality, global exposure. You have the selective emerging markets with now in a world where commodities are even more important. So you have the Brazils of the world doing so well on the EM and the Middle East theme. You have the asymmetric play in technology where off base, the mega cap, large tech do really well. On risk on days, the old theme of picks and shovels of the AI, meaning South Korea and Taiwan, will come back up. People are still looking to hedge inflation a bit. So, assets like listed infrastructure, which are inflation hedges and have protective, but yet they give you income stream, and they are listed equities. So things like listed infrastructure doing well. So I think we have this whole new set of new defensives, things that are the interplay of the Middle East conflict and the secular forces, and I think that's really the place to kind of pay attention to.
And we've seen that in places like here in the US, we've seen that in places like Asia, where we do have these very strong, very bullish AI stories. But what about Europe, that doesn't have the same kind of narrative? You know, particularly when you hear about jet fuel with weeks that they've got left, and maybe not as strong, as I said, kind of AI themes playing out, AI companies out in that part of the world.
So I would say Europe is somewhere in the middle kind of thing. It's not a beneficiary on the risk on days, it's not a beneficiary on the risk off days, but it is still part of the secular forces of diversification, so to say. But I think the more important places to concentrate on risk on days. You go for the picks and shovels and the depths of the AI story. You go for the granular strength in emerging markets, and on slightly risk-off days, you really look at the large cap tech. And because of that, the US has really done so well. People say, I mean, through the Middle East conflict, US was the least affected, right? We had the least amount of drawdowns. And everybody said it's because the US is now an energy exporter. Sure, that helped, but energy is only 5% of US equities. US equities kept doing so well through the Middle Eastern conflict, the least amount of drawdowns, because of the large cap tech which has taken on defensive qualities.
So AI and tech is sort of the new defensive player. Is it enough to offset the other concerns and sort of headwinds that could potentially blow from this conflict, as I mentioned, with some of the sort of stagflationary type of elements that are starting to show up in some of these prints. I mean, you know, we've seen it here in the US, but as I mentioned and highlighted, the BOJ kind of raising it last night, and then particularly out in Europe, where we're starting to see higher inflation, slower growth concerns as well.
Absolutely. I think the difference is why the world has handled most equity markets. They have handled this crisis so much better than expected is because we entered this crisis where the global economy, equity markets were at a very good point. I think that's the key difference. In the 2022 conflict, the world was already very stressed with COVID and supply chain and epidemic, exogenous shock. This time the world, the starting point heading into a shock has a big impact. How the impact of the shock plays out, I think that is something that we really need to be cognizant of.
Be focused on. Yeah, I mean, you raise a really interesting point, and I also think it's the liquidity angle as well. I mean, you know, we're not going potentially into a year where the Fed is likely to hike rates a number of times. I mean, people are talking about sitting on their hands throughout the rest of the year, potentially even one in the system cut. Indrani, always nice of you to join us. Thank you so much for joining me here.
Thank you, sir.
Always a pleasure. Indrani Day, Head of Global Investment Research over at FTSE Russell. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so sometimes
Next.
Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Back to Morning Trade Live. According to a Wall Street Journal report, Meta is preparing to undo its acquisition of AI startup Manus after China banned the transaction. That will take some doing. Meta bought Manus for $2.5 billion in December and has already integrated the new technology into its systems. Manus was founded in China but relocated to Singapore last year. Certainly a setback for Meta, which is looking to compete against big tech companies in AI. It's down just fractionally right now, almost 0.9%, $672 and change. This is going to be a very interesting story to watch and how that unwind plays out. Welcome back to the Morning Trade Live. It's time now for the big picture, so let's welcome in Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research. Nate, good morning to you. You say that what we've seen from the journal as far as OpenAI not meeting its goals is potentially another DeepSeek moment and perfectly timed piece to spoil the chips party. Walk us through that.
Yeah, good morning, Sam. So let me start by saying to the audience, I'm a trader. My demographic, I cater or teach option traders or more active traders. That's my lens. and I'm not a chip analyst, and let's just keep that in mind. But I traded through the .com boom and bust, and I'm not saying that's what this is, but it's very interesting, Sam, the timing of this story. When you look at, we had this historic run of 18 days in a row up on the chips, and the thesis driving that is that compute is insatiable. Intel comes out with their earnings and saying not only is it GPU, TPU, but it's CPU as well. Everything gaps up on that Friday in terms of the chips. And then the timing of this story, it introduces, like Inception, one of these thoughts into the mentality or the trader's psychology that says maybe the demand for AI is not as robust. And so, Sam, there's a lot of these assumptions that are built into the AI secular growth story, the thesis. And a lot of the analysts have assumptions about what it means in terms of revenue growth, et cetera, et cetera, et cetera. And if you look at the charts, what I look on the stocks, number one, context is important. So you had the hottest trade on Wall Street, 18 days in a row, 85 RSI, that's the highest in over 20 years. And then you get this news story that comes in, and we get a gap down. So if you look on the chart, you can't really see it on the line chart that we have on the screen, but technicians, this could be an island top. Now we need to see if we get follow through to the downside. If we get follow through to the downside for the chip specifically, this could be a bearish island top formation. It's too early to call that right now, but I think if you've been in this trade, at least you have to respect kind of the potential for the shift in this narrative. And Sam, this lines up with mega cap tech earnings, hyperscalers, spending. If there's some kind of dent in demand or the need for compute, or at least the perception of it, what do traders want to see out of CapEx when the hyperscalers report? Is it going to be a good thing if they amp it up, given today's story? So there's a lot going on here, but I'm just very focused on the chips right now.
Oh, absolutely. And I think what everybody's just trying to gauge right now, Nate, is yes, while that story has been a momentum killer for now, at least if you look at the performance in the stocks, as you pointed out today, down 3.5% on top of that sort of orderly pullback of slip we saw yesterday. I mean, is this a buying opportunity, or does this have further momentum to the downside if this all comes true and the Wall Street Journal is correct in its findings of OpenAI? So as we head into mega cap earnings tomorrow, what will you be looking out for then? Because as you say, it's going to be a tricky balancing act, right? Because one man's capex is another man's revenue, but obviously they've got to tread that fine line between how much, given, of course, things maybe aren't turning out as we perhaps thought.
Yeah, so there's going to be a lot to look at. It's going to be the CapEx budgets, because that has been our read-through on demand. It's the terminology for several quarters now has been that it's insatiable. It's not met. It's still imbalanced, meaning more demand than supply. We need more compute. We don't have enough compute. Within that narrative, there's ROI on mega cap tech and hyperscalers. So we're going to have to take a look and see, what do those revenues numbers look like? And then thirdly, Sam, is also going to be commoditization of AI models. So if you go back to last year with DeepSeek, when we had that scare, Jensen Huang came out in defense, among others, and basically said that, oh no, with inference now, with cheaper models, cheaper entry, it's actually going to expand the adoption and increase the velocity of that adoption. And that saved kind of the tech trade to say, oh, okay, we were just a little bit too concerned that we didn't need as much compute as we thought. So with OpenAI's narrative, what do we need? We need something to kind of basically demonstrate some kind of another thought that's going to help support or bolster the AI trade, which has carried us so far. I would think what you need is, okay, OpenAI came out with missing their weekly user numbers and revenue growth rates. Maybe Gemini's eating their lunch. And so maybe it's just an OpenAI story. So that would help support the compute, basically narrative. But we also have the commoditization narrative, because AI, in my view, it seems like that all the Mag 7 have had these wide moats in their ecosystems. AI is kind of a moat killer in my view, and that's the commoditization concern. Why is that a concern? Because a lot of competition, pricing goes down, ROI expectations go down, et cetera, et cetera. So there's so much tied into the AI narrative. So this could be a critical juncture where we stand right here, right now, as we head into mega cap tech earnings in the next couple days.
Yeah, I mean, you raise an interesting point. It's yet to be seen, perhaps too early to, I guess, take away whether this is an idiosyncratic or OpenAI problem or, broadly speaking, across a number of other platforms, because some of the conversation this morning, I was speaking to KG about this earlier, is that the demand is still there. I mean, we could just see it coming from others like Anthropic, for instance. So I'll have to wait and see. But it's going to be very interesting to see how maybe some of these tech companies address these concerns this week. How are you just thinking about overall volatility in such a consequential week, Nate? Because, of course, it's not just the micro, it's the macro as well, with the Fed getting its feet under the desk today.
Right. So in regards to the overall environment, we're not even talking about a war. We're not even talking about, oil prices are up today, the potential consequences of that, the fact that stocks are at all-time highs, overlooking a lot here. We've got a shift in, a Fed chair that's potentially coming up. Sam, there's like no discount for any of that. So I'm just talking AI. So in regards to that, you look at the VIX at 18.6, 18.8, wherever it is right now. And I think it's probably underappreciated. After we get out of April into May, seasonality doesn't work too well. After we get past mega cap tech earnings, some of that kind of catalyst, that pre-earnings catalyst where you might want to position ahead of the report, we begin to deflate that balloon a little bit as they've already report regardless of what they report. So I just think for the next couple of weeks here, 18.5 VIX, underappreciating the potential to get some kind of volatility spike in my view.
Okay, we'll be watching. We've got a big next couple of days to watch here as we get the Fed decision and then also the press conference and these mega cap earnings. Nate, always appreciate it. Thanks so much. Nathan Peterson there, Director of Derivatives Analysis, Schwab Center for Financial Research. Coming up, it's time for the Morning Trade. So we'll take a closer look at UPS. Morning Trade Live. We'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
While others recap the news, I help you read between the lines from what's moving markets to what's next. With sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
We're back on Morning Trade Live. Let's focus on package delivery stocks. We've got a couple here. UPS is down after earnings. We'll focus on that in a second. FedEx is lower, down 1%. Amazon just slipping a bit. Let's take a look at the chart for UPS specifically after reporting first quarter earnings this morning. Because, of course, we did see an okay quarter. It seems to be the guidance that was the issue here. So let's get out to Marley Caden. This is the focus of the morning trade for us today. We're hot off this report card, Marley, that we got this morning. It's interesting because I was speaking to some analysts going into this saying that if the guidance looks solid, then the street might actually be able to forgive what they expected to be a tough quarter. But it seemed to be kind of like the other way around, where the quarter didn't look too bad. It's the guidance that seems to be a bit of a fly in the ointment here. Just walk us through the numbers.
Yes, and good morning, Sam. Like you said, the quarter itself, the numbers are actually pretty good. So let's start with those, and then we'll take a look at the guidance picture here. They beat estimates, actually, for the first quarter in terms of EPS and revenue. They beat on the top and the bottom line, which frankly was unexpected here. Earnings came in at $1.07. That was versus the expectation for $1.02. Revenue came in at $21.2 billion. That was just slightly better than the $20.99 that was expected.
So the beat wasn't really what the street was looking for. They were looking for some guidance here. The issue is that they just reaffirmed their consolidated financial estimates for the guidance. They put in, coming in about $89.7 billion in revenue on a non-GAAP adjusted operating margin of 9.6%. And the CEO did say on the call that it is just too early for the company to raise guidance. They were optimistic about the numbers that they got this quarter, but she said there are no indications that she is concerned about the health of the business. They were just going to take a more cautious approach here. The other issue that's plaguing the stock today, sending it down about 5%, is in the domestic segment. UPS's revenue actually dropped off by more than 2%, about 2.3% to be exact, because of an expected decline in volume that, of course, tied to its breakup with Amazon. They're also in the midst of a turnaround plan. They're trying to enhance their automation in network, but they did say that they achieved $600 million in cost savings in that networking efficiency program, with that expectation to reach $3 billion in year-over-year savings just this year alone. So we did get some clues about the turnaround plan and its effectiveness so far. We also had a better than expected quarter. They also addressed the fuel surcharges and the rise in fuel prices. Company executives said that these fuel surcharges have not had a material impact on UPS's business, and that it remains too early to determine exact impact from the war in the Middle East. So I think, Sam, what we're seeing here is we would have forgiven some poor numbers in the quarter because the bar was so low. They wanted slightly higher guidance. Instead, we got very confident numbers for the first quarter, better than expected, but still took a very cautious approach in terms of the outlook here. And that, combined with the drop-off in domestic revenue, I think was just sort of the perfect storm to pull lower. Again, 5% lower. We've certainly seen worse this earnings season, but, doesn't feel good for investors today. But they just took that cautious approach. They said it's just too soon to decide that we want to be optimistic and confident based on this first quarter performance, because there's too many unknowns right now tied to the Middle East.
A lot of visibility for a business like this, you can appreciate. But yeah, I mean, interesting as far as some of the details, particularly US domestic. Marley, thank you so much for breaking down the details. Trading down 5.5% right now. So let's trade this name now with Tim Bigger, options strategist over at Pilot AI. Very good morning to you, Tim. It's been an interesting chart, I would say, this one, given, of course, the turnaround strategy. I feel like the street has been tolerating, accepting, or forgiving of obviously what they've been doing here, because, I mean, over the course of the year, I mean, it's still up, what, like 5% or so? But coming into this, it was still up, what, like 10%? So just walk us through an example trade on this one.
Yeah, absolutely, Sam. And, the quarters you were talking about, certainly the quarter itself was pretty darn good, I think, beat on the top and bottom line. The guidance, kind of, I guess, guarded, right? They don't want to be putting it out there too much, but I kind of like, as I do many stocks here, being positioned to buy it on a further dip. And for UPS, this 5% drop is kind of a flesh wound with earnings. This is a stock that's kind of going nowhere, as you just talked about, year over year, but you have these bouts of big moves here. So that 98.50 area, big time support on the chart. So I like positioning below that, going out, selling the June 95.90 put spread, getting about $1 net credit, so like the 25% return on risk, about a 7 point or 7% or so downside cushion on the stock. And I don't mind being a buyer on dips on certainly UPS, which I don't think will be affected too much by AI, as we're seeing the market every day swing back and forth. Deliveries certainly more difficult, maybe not impossible long term to put in an AI context, but I kind of like the shares here at lower levels. I wouldn't be an aggressive buyer up here, though.
Yeah, if anything, you would expect this one to utilize AI rather than AI sort of eating its lunch, sort of a difficult kind of business to replicate in that sense, you could argue. But thoughts on the overall market today? I mean, particularly given we're heading into a pretty monster week for earnings and the Fed.
Yeah, absolutely. Tomorrow, in my opinion, is one of the biggest, certainly, market cap earnings days I've ever seen in my trading career, which goes back almost 40 years now And plus we have, the Fed meeting, probably the last one by Powell. Don't expect really much out of the Fed, but more importantly, what those 4 big earnings reports tomorrow and then Apple on Thursday come out with, and more importantly, how the market reacts to them, given where these stocks are valued at. Valuation on all these names at historic extremes, so they better deliver, or we may see a further down leg in this market, which I think is almost needed here, given the ferocious rally we've seen since making the lows, it seems like, at the beginning of the month.
Yeah, and as we've been discussing, it seems like this journal story around OpenAI sort of falling short of some of its targets has been a bit of a momentum killer going into what is going to be a pretty big day tomorrow. 2,100 companies reporting this week, 40% of the S&P 500, 5 of the Mag 7. We'll be watching, Tim. Always appreciate it. Thanks so much, Tim Biggin, options strategist, Pilot AI. Coming up, we'll take a closer look at the sectors on the move this morning and international headlines impacting global markets. Morning Trade Line will be right back.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Trade Live. I'm Sam Barnes coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. So we're joined by Alex Coffey over in Chicago. Good morning, Alex. Walk us through some of your takeaways on the session about an hour and 10 into trade.
Yeah, it's kind of a unique day again. We got obviously a ton going on in the next 48 hours, from a Fed meeting to all the big tech earnings, some after the close as well, even today. And you see a market that's essentially trading on its lows of the day, Sam. You might think it's a little bit more pronounced with the selling, but it's actually kind of a 50-50 day. 46% of the S&P 500 components are higher actually on the session. And in real time, 6 of the 11 sectors are higher in real time. That said, IT is down about 2%. And that explains why you see a NASDAQ down 1.3 and an S&P down about half that amount.
Yeah, walk us through the Mag 7, given, of course, just such a big week for some of these names. We're seeing a pretty split picture across those stocks right now.
Yeah, and one of the interesting developments intraday is that Microsoft, after being much lower earlier, is actually higher on the session now. But NVIDIA under quite a bit of pressure after setting a new all-time high yesterday, closing at an all-time high yesterday. Meta down ahead of earnings. Tesla down, Amazon down. Looking at Alphabet and Apple, though, Apple, interestingly enough, bouncing back after some weakness yesterday. Much of this movement probably tied to those murmurs and reports of OpenAI maybe missing some of their internal goals. So we're sort of seeing the reshuffling take place as a result of that. All in all, though, Sam, you know, everything that's happening here in real time, so much of it is going to be determined ultimately by what these earnings are in the next 48 hours, that some of this is just maybe pre-earnings positioning as well, pre-Fed positioning as well. So not putting too much credence yet into today's activity, but hey, it's still early. A lot can develop over the next several hours.
It certainly can, and I mean, look, at least for now, we're seeing higher oil back in triple digits, higher yields across the curve, higher dollar as well, so I suppose it kind of makes sense. Not to mention, obviously, this journal article around OpenAI, but such an incredible run for some of these chip stocks into this consequential week for tech earnings. Got some blue chip earnings out today. It looks like the Dow is managing to hold in there, I guess, relatively speaking, compared to the others. Not as deep losses as we're seeing across some of the other major averages. Anything else stand out to you about this market this morning?
Yeah, one thing that does stand out, Sam, is we're looking at a market again that's under a little bit of pressure today. You talked about what's going on with oil, but volatility isn't really moving that much higher. So you look at the VIX, it's up, 0.6 to 18.6. You look at VIX futures, which are of course tradable. They're up like 25 cents to 20.30. Now, a lot of this has to do with the fact that it's remained bid throughout much of this rally. And so when you look at that, we're still elevated on historical level, but it seems like given all that's going on, the 18 to 20 range seems to be sort of a near-term floor for volatility, even in a market that's moving higher. So interesting that it's not moving up when we're starting to move back down, but it didn't really move back down that much in the rally.
Yeah, Nathan Peterson was sort of touching on that as well just earlier. So interesting move, particularly for positioning ahead of, as you say, what's going to be a big next couple of days. Alex, really appreciate it. Thanks so much for that.
Of course.
Turning to some international stories now. The BOJ kicking off a big week of central bank decisions with a hold on rates, but there is an increasing hawkish tilt on the board. 3 members were in favour of a hike, which is up from the 1 at the March meeting. The BOJ raised its forecast to core inflation while revising down its economic growth forecast. Governor Ueda saying they're waiting to assess the impact of the Iran war. We saw the Japanese yen initially firming up before pairing gains. Bond yields rose on the short end, while the Nikkei 225 fell 1% in the session. Sticking in Japan, shares in SoftBank tumbling in the session, making it the worst single percentage loss in 6 months after the Wall Street Journal said OpenAI missed its targets. SoftBank has been making massive investments in OpenAI and holds a significant stake in the company as part of Masayoshi Son's AI strategy. Look at these ADRs right now under pressure. In corporate earnings, shares in BP rising in London after the company saw profits more than double from a year ago in the first quarter. The British energy major benefiting, like all the others, from the surge in oil and gas prices coming from the Iran war. Meantime, shares in Barclays under some pressure after the British lender reported improved profits. The company did take a £228 million loss from the collapse of mortgage lender MFS, but total income beat forecasts. Income in its investment bank exceeded £4 million for the first time during the quarter. We're seeing both these respective ADRs heading in opposite directions for us this morning in US trade. Coming up, it's time for Inside Out. We'll take a closer look at Visa and bring you an example trade on that name when Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis, from U.S. equities to global macro matters, Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back in Morning Trade Live, and we're looking at the chart for Visa now, rallying over the last month or so after hitting its 52-week low on April the 1st. And today is a big day for the company as it will report earnings this afternoon after the market closes. We're trading up 1% right now, $312.82. So looking at this name for us is Stephen Bigger, Director of Financial Services Research at Argus Research. Stephen, always nice to see you. So the banks say that the consumer is healthy. Amex seems to think that the high-income earners are continuing to tap the plastic. So what's Visa going to say?
Yes, hi Sam. Good to be back with you. Well, Visa is very consistent in their spending growth patterns the last several years, generally growing in this high single-digit kind of 8 to 9% area. So I think we'll see probably the same from that. It tends not to vary too much, and they've been very much a story of turning this kind of 3% to 4% consumer spending growth into this high single-digit range by just grabbing more share from cash and whether it's checks or people using more digital transactions, buying more online where you can't use cash, taking advantage of rewards programs, the safety and convenience of credit cards. So that's a long-term story here. And I think that that continues. But yeah, your point about American Express, look, I think the K-shaped economy for the consumer is alive and well still, with the affluent consumer having a lot more discretionary spending and really holding up consumer spending generally.
What metrics are you going to be watching out for? I mean, do we continue to see a story of low double-digit growth and mid-teen EPS growth this afternoon?
Yeah, that's been the story for Visa, and I think that's what we'll continue to expect. We don't expect much change in the guidance either. Keeping an eye on margins. Visa has 60+% margins, operating margins. That's very enviable. MasterCard is kind of right up there, a little bit less. But that's been the story, is how they've been able to turn that high single-digit or low double-digit revenue growth and the mid-teens earnings growth through operating leverage. And I think that continues, and that's one of the reasons how they got to that 60% and get that elevated multiple too, which is very important for the stock.
Okay, so looking out for anything that they say on the consumer, no doubt any update on what they're saying about AI. What else are you going to be looking out for, particularly on that conference call, Stephen?
Well, yeah, they'll probably bring up the benefits of AI for them, whether it's for fraud detection, loss prevention, whether it's how they're using agentic AI agentic to help consumers with their purchases, recommend purchases, and so forth. So I think that's also going to be a topic of conversation, how they're using that to their advantage, not to the disadvantage, broadly that we're seeing in some industries. And they'll probably talk more about the K-shaped consumer and where the spending is coming from. International is an interesting one here because of the, was there a potential slowdown with the Middle East conflict? So how are consumers spending in terms of international travel? That cross-border transaction is a big source of revenues for them. So we'll see how that plays out. But again, I don't expect too much change in the expectations for that. Still talking about that resilient consumer, similar to what the banks did when they reported a week or so ago.
Yeah, it's interesting. Been reading a report about how traders have actually been turning to some of the prediction platforms to emphasize what's going to come up in this call. The top being international tokenization as well, and the World Cup is up there. So let's wait and see. Stephen, really appreciate it. We're going to leave it there. Thanks for the preview. Stephen Bigger there, who's the Director of Financial Services Research at Argus Research. Appreciate it. Let's trade Visa now with Tom White, host of Fast Market. Good morning, Tom. How would you approach an example trade on this name?
Well, implied volatility levels are relatively elevated going into this report. The stock is still down about 16% from those all-time highs that we saw last June. So it's been a struggle here for Visa. If you start looking at their growth in payments, and then you start looking at cross-border transactions, I think those are going to be the key metrics that you're going to have to focus on, what impact the war and the conflict in the Middle East is having on consumer spending. Because, you know, you look at retail sales data, it's been pretty robust. So I looked at something in the bullish camp as far as an option strategy here with Visa, where I'm going to look at buying a bullish call diagonal. And this takes advantage of that dispersion between the option series in Visa here going into the report, because we've got elevated volatility in the near-term options. So I went out to the May 15th monthly options that expire in 17 days, bought the in-the-money 310 strike call, and then against it, about that one standard deviation move that the option market's pricing in, which is about $10. I went up, or just over $10, went up to the 325 call and sold that in the May 1st weekly options that expire in just 3 days. So I'm selling that higher implied volatility in the near-term option. So it's a 2-week wide bullish call diagonal, $15 wide. You're paying roughly, I've got a $7.90 debit as my price. It's probably trading closer to 8.5 now because the stock has moved higher here. But the debit you pay is going to be your risk, and the debit that we're paying is about half the width, just above half the width of that $15 bullish call diagonal. So you're paying a lot less than the width of it, which means anything above about 313, 314 is going to be profitability on this one. You're buying about a 50% implied volatility, selling about a 70% here on this bullish call diagonal. So if you think that it's going to rise, maybe that one standard deviation go up towards 325, this takes advantage of it. But anything above about 313, 314, which is where we're at right now, is going to be profitability. You'll also have that potential to roll that short option once or twice, creating more credits, increasing potential profitability. So if you think it's going higher, this strategy takes advantage of that over the next 2.5 weeks.
All right, Visa, next cap off the rank as far as the earnings is concerned this afternoon. We'll be looking at that one. Tom, thanks so much for the example trade on this one, trading up 1.1% right now. We're looking at a down day for these markets. A bit of caution as we get into this Tuesday day of trade off the back of back-to-back records for the S&P 500 and the NASDAQ. We've got concerns around OpenAI, some of the compute power, some of its targets as well. That's weighing a bit on semiconductor chips today. The Dow Jones is holding up relatively speaking. Thanks for joining us here at Morning Trade Live. You've got Trading 360 coming up next with Marley Caden.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from our Chicago headquarters. Here's what we have coming up for you in today's show. We have a huge week of earnings ahead of us. 5 of the Mag 7 names reporting. Our 360 Spotlight will take us through the expectations for those earnings and what key numbers investors are looking at. Also, Oracle shares are lower today after OpenAI reportedly missed some key internal metrics. George Tillis will take us through the connection there and give us an example trade in our disruptor. And then in our 360 panel, we are going to take a look at the report from Spotify and why the streaming giant is falling despite solid earnings. Lots to get to today, but let's take a look at how the markets are shaping up on this Tuesday morning. Bit of a mixed picture here, mostly to the downside. The S&P here trading about 0.6 lower at 7128.19. The NASDAQ about 1.25% lower at 26,962. The Dow holding on, it's added 24 points, not many, but in the green here. And the Russell 2K down 1.25% as well at 27,53.99. On the 10-year, we are ticking higher. We're at 436 right now. The dollar at 98.56. Gold is lower, off by more than 2%. 45.92.60 a troy ounce right now. For crude oil, we are dangerously close to that $100 a barrel mark. We're up 3% right now at 99.28 a barrel. And Bitcoin at 76,305, fighting to stay out of that range between 65 and 75,000, just barely holding on right now, down more than 1% right now. I do want to welcome in Alex Coffey to the show, though, to take a look at one of the stocks on the move today following earnings. Alex, let's talk about Corning. A bit of a mixed report here, but we are seeing a downside move in this name. Take us through the numbers and why we're seeing some pressure.
Yeah, I mean, let's start with why we're seeing pressure. I think it's because expectations were sky high going into this report. Marley, this is a stock that had rallied some, over 90% just this year alone. And when you look at the results, strong, but kind of in line. And so you see the stock down 8%. It was upwards of 10% earlier and even more in the pre-market at points. First quarter core EPS, 70 cents. Pretty nice growth from the 54 cents that they showed last year, but pretty much in line with the estimates. Core sales up 18% year over year. Did inch above those estimates, but not by a huge margin. 4.35 billion. I saw 4.3 for a consensus estimate. Now, when you break it down by the different segments, optical communications, that segment, which is about $1.85 billion worth of net sales. That was up 36% year over year. Their life sciences segment was up 16% year over year. When you look at guidance, though, current quarter, they see core EPS 73 to 77. Consensus was looking for a little bit more, 76 for a midpoint. So I think that was seen as a bit of a disappointment. When you look at the response today, I think it's probably warranted and justified if you take into account the really dramatic rally that you saw going into the report, some of this is just priced in.
Yeah, I mean, I was just looking at the outlook numbers and management commentary around it. I wouldn't say it was unexpected. I agree with you there, but surprising to see the move to the downside so aggressive on something that wasn't really a surprise here.
Yeah, and maybe that is, again, you got to look at it, and I think when you look at some of the analysts, Citi in particular, they spell it out. Since the stock performed so well under the report, they expect the shares to trade down, given an inline guide with the impact to 2028 and beyond from additional LTAs. I basically take that as, hey, this was a stock that was priced not only for perfection, but for better than perfection, and didn't deliver that. It delivered pretty good, and pretty good wasn't enough.
I mean, we've certainly seen the ones priced for perfection deliver arguably near perfection and still move lower. So, Alex, thanks for taking us through Corning today, moving down about 8.5% right now on the backs of those earnings. That was Alex Coffey, co-host of Next Gen Investing. I do want to welcome in our next guest of the program. Joining us now, Jeffrey Small, managing partner at the Retirement Income Source. Jeffrey, it is great to have you back on the show. Now, Alex and I were just talking about Corning's earnings, but obviously, as we look ahead, there are some much bigger names coming our way this week. We've got a monster week of earnings here. As far as your expectations, are you focused on these Mag 7 names we're hearing from, or are you more interested in some of the other names?
I'm really focused on the Mag 7 names, specifically the three leaders, really, NVIDIA, Google, and Amazon. NVIDIA is the toll collector, Amazon's the landlord, and Google is the advertiser in terms of the revenue stream. And so, basically, NVIDIA controls the AI highway. Every model, every data center, every hyperscaler runs through them. Amazon has the distribution advantage with AWS. So as AI moves from build-out to deployment, they're really the ones collecting recurring revenue. And Alphabet is the sleeper. They're using AI as enhancing their search, driving engagement, and their cloud business is finally scaling. So you've got infrastructure, distribution, and monetization. And so that's why those three lead the Mag 7 today.
As they lead, what does that really say about the rest of big tech here? Are they stalling or are they just lagging?
Well, outside of outside of NVIDIA, the rest of the Mag 7 have been lagging except for Google and Amazon. And so this is really a three-stock trade out of the Mag 7. And as long as we have these three generals carrying the load of the Mag 7, the market can hit new peaks and new heights. But if NVIDIA sneezes or one of them sneezes, the whole market could get pneumonia.
So do we think there's a possibility where Apple and or Microsoft could reassert themselves as the leadership here, or have we just structurally shifted away from them in the markets?
I think we're structurally shifting away from them. Good on earnings is not good enough. We have to exceed expectations, use monetization from MI to enhance earnings and revenues, and those three leaders that I've mentioned have the best option to do that. Microsoft and Meta would be my next picks, and of course Apple and Tesla are at the bottom of the Mag 7 at this time. As far as holding them as a trade, where in 2021 and 20, owning those 7 were all winner, winner, chicken dinner. That's not where we are today. We're in a selective tech environment. It's not all for one. You have to own the ones that are going to do well, or you're going to get left behind.
And Jeffrey, Alex Coffey and I were just talking about what you just said. Good is no longer good enough. We were looking at Corning, and I was talking about UPS even this morning. And what is better than good? How good do we have to be when the expectations are already so high, particularly for the three Mag 7 names that you say are prime for success here?
Well, I think really they've got to exceed guidance by a healthy margin. And so what would that be, 5-10%? And what we saw last quarter was NVIDIA blew out guidance, Meta blew out guidance, and the market was in a sell mode. And even though their earnings were phenomenal, what happened? They fell on good earnings. And so, I'm not saying that's going to happen again, but the possibility is there because the macro environment is uncertain right now, and rates are compressing profits. As rates go higher here, we're going to see sell-offs like we have today. And so it's the old story, rates go up, market prices fall. And so, for those three leaders, though, that we're speaking about, Marley, I really think that you want to start buying the dips, dipping your toes in at this time. And so we may not see these stocks cheaper than this ever again in the next 6 months.
All right, so let's play devil's advocate here because you just mentioned the uncertain backdrop that we have right now. So I feel like this question needs to be asked. Of the three that you're focused on, which one is at the greatest risk of potentially disappointing, and what happens to the market if that happens?
Well, I think they're all three in the stack for AI, the leaders of AI right now in terms of the hyperscalers, with NVIDIA providing the infrastructure. I think that the biggest one that would hurt the market the most if it sneezed or lowered guidance or had some type of negative tone to their earnings would be NVIDIA, and that would cause a massive sell-off. And when valuations get stretched like this, Marley, the market really becomes codependent on movement forward on earnings only. And so earnings have got to be greater than expected, or we take a hiccup here because valuations are technically stretched. Now in the Mag 7 minus Tesla, we're at 30, 35 times earnings right now on a forward basis. That's not too bad. I wouldn't say it's overbought, but we are pushing the boundaries of the norm here. And so one hiccup from any of the three, and we could see the bubble actually get popped by that little pinprick because valuations are stretched.
So let's focus on NVIDIA there, because you're not the first person to make the analogy that if NVIDIA sneezes, the market gets pneumonia, and there's a huge effect, and we've seen it before. If that happens, take me through the chain reaction, particularly because their earnings come at the end of earnings season. We won't hear from them almost for another month. They're May 20th, so we've got a few weeks here. Where do we see the biggest fallout if NVIDIA falters in any way?
Well, I think in all of the hyperscalers, obviously, and in all of the infrastructure plays, in the broader market and energy. And so NVIDIA is seeding every sector, every industry with AI technology to improve earnings and efficiencies. And so, it could crush the market, basically. I don't see that happening. I'm not a doom and gloomer here. I think the bullishness on NVIDIA is very strong for the next 12 months. But if there was a curveball that came out, something went wrong, that would basically collapse the market. So NVIDIA's valuations today are easily justifiable. We don't see that happening over the next 12 months.
All right, so with what you just said there with the bullish outlook, you expect this rally that we're seeing, despite the slight pullback today, to continue?
I do, and with the macro uncertainty, we'll see the market ebb and flow here. With potential for larger drawdowns based on energy, based on rates, based on geopolitical, and based on the Fed's posture. And so, with every new Fed chairman, we see the new Fed chair getting tested by the markets. And so he's gonna have to come right out of the gate here, Warsh is, and set the tone. And hopefully he's gonna be speaking and saying what the market wants to hear.
And in terms of the rally itself, in terms of the breadth, what sectors or groups do you think need to step up to make this rally more durable?
Well, we've seen that already. We've seen in semis and industrials and small caps, they're doing very, very well right now. A lot of money's been moving in that direction. So we need the other 493 stocks to carry the market if the new leaders in the Mag 7 are going to be NVIDIA, Amazon, and Google. And so, that's been happening, and that's why we're in the middle of a rally right now, and we're hitting new peaks at this time. So we need the earnings to keep growing. 11% earnings growth is predicted for the next, 493 stocks that are out there. And for the Mag 3, I'll call them now, or the non-Mag 4, we see earnings growth between 20 and 45%, depending upon which holding you're talking about.
All right, and let's just completely move away from these three AI leaders. Outside of big tech and the hyperscalers in the semi space, where are you finding opportunity right now, Jeffrey?
Well, I think I think energy is still a good bet at this time. Of course, industrials, materials, areas in small caps. I mean, you want to have a diversified portfolio at this time. You don't want to put everything into tech, and so it's intelligent to buy companies that have good earnings in those categories.
All right, well, Jeffrey, we really appreciate you taking the time to be with us to help us preview some of the expectations for these names and what might happen in the market when we hear from these Mag 7 names this week. Jeffrey Small, Managing Partner at the Retirement Income Source. And we've got a lot more for you on Trading 360 next. The Big Three is coming your way. We've got 3 stocks and 3 charts for you. Rick Ducat will take us through the technicals, and Jessica Inskip will take us through her trades for T-Mobile, Credo, and Marvell. That's next on Trading 360 on Schwab Network.
most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through her picks today, Jessica Inskip, the Director of Investor Research over at stockbrokers.com. Jessica, great to have you back on the show. We hope you'll come join us again in studio sometime, but to kick things off, let's just start with your thoughts on the action that we're seeing so far this week. A monster earnings week. We're going to hear from about 40% of the S&P 500 and, of course, those 5 big Mag 7 names this week.
That we are. Volatility absolutely is expected, but it's an interesting opportunity to see what the market really cares about. Are we focusing on earnings? Is the Fed story and narrative going to take the spotlight, or is it an inflation picture? So a lot of data to digest, but from the earnings picture, what I'm really focused on is AI CapEx. We're looking for demand. We know that there isn't supply constraints, but it's certainly a demand story. But if we're looking at CapEx, the numbers are really massive. If you include Oracle, and we're focusing on those big 4 hyperscalers, so Amazon, Google, Microsoft, and Meta, that group is expected to spend about $680 billion in CapEx just in 2026, and that's up 64% year over year, and that could still accelerate, and because those estimates are moving higher. So what I really want to see is, where is that AI demand? Where is that CapEx spend? My picks today are around a lot of those bottlenecks, but AI demand is still outpacing supply, and I want to see if that narrative is reiterated, and of course looking at forward guidance. So still positive on the AI narrative, but a lot to digest to understand what the market is focused on. Is it earnings, inflation, or Fed changes?
We will soon know. Wednesday will be our first glimpse into that answer. But let's talk about where some of these bottlenecks could be in terms of this AI trade and go through your big 3 right now. Your first pick, T-Mobile. Take us through your thesis on T-Mobile.
Yeah, so T-Mobile, this is the only one that doesn't have to do with the bottlenecks. This came up just so I can have something that wasn't included in the AI theme. So I run screens constantly. Every week I run what's called a growth screen and a high quality dividend yield screen. This showed up on both. When that happens, I love to bring it to the show. So essentially, T-Mobile has a dividend yield of 2.23%. They have a 39% payout ratio, which tells me they've got portions of earnings which are going back into growth. And on top of that, they have strong cash generation with free cash flow share from a trailing 12 months is 21.76. So essentially what I'm looking for is a company to smooth out volatility, gives me a dividend yield that is covered by free cash flow and a lower payout ratio. That way I can know there's still opportunities for growth. So this is the only one outside of that theme, but it's really to just smooth out volatility overall in the portfolio.
All right, Rick, and as we look at the T-Mobile chart, I can see you've got a pretty significant downward sloping line here, but we do have some peaks in there.
Yes, and perhaps not as volatile as it may look. This is representing really only a 29% decline from those highs. Still, notable difference, but perhaps not as bad as it may initially seem. So the first thing that strikes me about this chart is indeed our downward sloping trend line going across those highs, connecting these subsequent highs. We haven't quite made our way back up to that trend line yet at this point, but the other things that we recently hit are 52-week lows, 181.36. We did not actually make it down to that point once again. We managed to solidify slightly above that point, so it should be interesting to see if that comes back into play as a boundary once more. Some horizontal levels to consider in addition to 181.36. Our low point would be this relative low here that then became support, and then a breakdown point near 188, and this small gap level here near 195. Finally, importantly, these relative highs near 207 also stand out in the nearer term. When we do look at our moving averages that we follow, they're all trending lower, prices below all of them. Our 5-day EMA in dark blue is the closest one, coming in at 188. Meanwhile, our teal quarterly monthly EMA, 195.65, comes in just above that. RSI compressing in a triangular pattern here, also exhibiting a little bit of bullish divergence as we head into earnings. So momentum typically does slow as we approach a known event risk situation here. So more of a positive sign rather than it continuing to decline or even going back into that oversold area here. Our volume profile shows that we have a node here, and most importantly, our point of control near 198 is the heaviest trading area on our chart here. So this is the consolidative point potentially to the upside, a looming resistance level that could come back into play if earnings do make the stock have a boost to the upside.
All right, and as we look for T-Mobile's with their earnings today coming out, of course, today after the bell, so we could see a big move there for T-Mobile. But as we move to this next one and into these potential bottlenecks, we've got Credo as your first pick. They're a connectivity solutions company having a bit of a tough day today, down about 7%. But over the last 52 weeks, they're up more than 250%. So take us through Credo.
That they are. So I think a lot of the AI stocks are selling off because of the news that happened with OpenAI, with that internal memo that they didn't reach internal revenue targets, if you will, which is expected. There's been a huge shift from ChatGPT over into Claude, but either way, there is... Even when they took away Sora, that is a compute problem. And we need inference, so there are memory bottlenecks that limit AI inference scalability, and I'm looking for solutions for that, and Credo is what came up, even though they've had a big run. So volatile, high beta, keep that in mind. But what was interesting is they eliminate what's called link flaps during training downtime. So the problem is in massive clusters, a single link flap, which is a millisecond long signal disconnect, that can crash an entire AI training run, so those inferences, and that can cost millions of dollars in lost compute time, because compute is very important. So the impact with what they've come up with is called zero flap. That uses predictive telemetry to anticipate and prevent those type of failures, and that drastically increases the uptime and the reliability of large-scale machine learning models. So they're taking this AI bottlenecked, shifting to memory and data movement constraints. They acquired something called Dust Photonics that expand their silicon photonics capabilities. If you listen to even what Jensen Huang said in GTC about moving from copper into photonics, this goes into that model as well. So their core products really support high-speed GPU connectivity over that, and I really like the zero flap optics that enhance the stability in large-scale AI networks, because that's what we're looking for, is scalability, especially as we have these AI wars heat up, and the cost for compute is just something to pay attention to.
The AI wars are going to hit fever pitch this week, I think, a little bit. But let's take a look at Credo's chart. As Jessica mentioned, higher volatility here, higher beta name. You can see it in the chart. But take us through the technicals, Rick.
Yes, in this case, 289% during the past year, so this one actually perhaps is even more extreme than it may seem at a glance. But in this case also, we have an interesting situation because we had our old high point here, we made new intraday highs here, and here we made a new closing high. So a closing high is more important than an intraday high, but we still kind of stumbled at the same 194 level that marked that old intraday high from back in the October months here. So now, price has retreated somewhat here. We have a set of old highs at this point near around 165 that marks a resistance point. Now it's becoming more of a supportive point, so this also stands out as an area to watch. Relative lows here near 149 corresponding with a gap level here, so 135 to 149 also stand out. Trend line, we have been broken somewhat here, so now we have to look to our moving averages for more potential clues. We are mostly above them here. They're mostly still pointing up. Only our short-term 5-day EMA in dark blue pointing downward. That's also where we saw our highs of the day, roughly around 177.57. These shorter-term moving averages are are the canary in the coal mine, so to speak, of the potential trend change. So they're the least reliable, but they're the most responsive to these changes here. A small amount of bearish divergence before we had our decline. RSI has broken its own trend line and slipped below that overbought area. So something of a slowdown in momentum here today. When we also look at our volume profile study, here we can see that the most important node closest to our current price activity comes in here between about 136 to 150 or so. In this case, the point of control, 141.59 is the heavy trading area, so fairly close. We have a major volume node to keep track of to the downside.
Yeah, Credo right now trading at 167.26, as Jessica mentioned, along with a lot of these names moving lower on this OpenAI report, trading down about 7% right now. Your next name also lower on the day, not by as much. Marvell's down about 4%, but they also canceled a whole slew of orders from Poet, and I had some drama around that as well, alleging that there was some confidentiality breaching there, and some headlines that are dragging both names down today. So take us through Marvell.
That it is. Wondering if they're taking, well, I suppose they are taking what those orders are and giving those to other customers, which again, that competition for the data and the resources needed for these large language models. Nonetheless, this goes back to what Jensen Huang said in GTC. There's this dual track interconnect strategy that he introduced, so pushing copper bandwidth as far as possible. It can only go so far, and so if we're looking for this scalability and connectivity, copper works within just a certain format of racks, and it goes with just, I think it's up to 2 meters. So photonics is required for the scale-up network, and it connects hundreds of thousands of GPUs across racks, and Marvell is a solution to that. So they are definitely a beneficiary of this bottleneck with compute and connectivity. They did acquire Polartarian to advance photonics and high-speed data transfer. So the shift is very, very welcoming. They did have that acquisition of Celestial AI, which is where they took away from Poet and moved elsewhere, but that tells me that still optical scale-up connectivity solutions that they're focusing on. And they say they're positioning themselves as neutral, if you will, across hyperscalers, being the Switzerland of connectivity. I like the way that sounds, but there's growing demand. It could be an alternative to some of NVIDIA's solutions with optical switching. So this, again, still volatile, but it is a solution to a bottleneck that is emerging with artificial intelligence as we're looking to scale and just need compute in all of these solutions in order to see this trend to continue.
All right, as we look at the trend with the technicals in the chart out here for Marvell, certainly the steadiest, most consistent rise to the upside, but then a very significant steep rise more recently.
Yeah, sounds like a bit of poetic justice today. Sorry, I couldn't read this. Anyway, 170.84 was our high point. A very narrow, very steep channel type shape here that we have broken down through. Now this gap comes into focus between 140 to 144 as a potentially supportive area. Another important low point here and here, 122, 128. Those also stand out, but they're rather far away from our current price activity. And truly a very abrupt change in fortune here, a long, relatively sideways period, then punctuated with a very sharp, steep rally. And, generally speaking, the sharper and steeper the rally, the less sustainable it is. It doesn't mean it's not going to keep going up in a longer term here, but oftentimes these can be opportunities where traders are anxious about potential pullbacks after extended pushes to the upside. So now we can see our high came in at the 5-day EMA today, once again, 155.62 to the downside, 21 EMA in teal, 135.25. Our RSI has been broken through our upward trend line here, but just hanging on by its fingernails over that overbought area here. So we're right at 70 right now. A move below that level in the close today could signify a potentially bearish signal. So now our volume profile study once again shows us the highly concentrated trading activity that is active at these various price levels here. So a relatively small node between about 130 to 137. But, you'll oftentimes see most of the heavy volume activity lines up with pronounced range-bound areas here. So as you might expect, most of the activity down here between like 70 to 95 or so.
All right, and right now Marvell trading at 151.74, again down about 4% on the news of it canceling orders with one of Celestial AI's longtime partners. But Jessica, I want to thank you for being with us for Big Three and bringing those picks to us today. Jessica Inskip, Director of Investor Research at stockbrokers.com. And of course, thanks to Rick Ducat for always breaking down the technicals for us. Coming up next, we are going to spotlight big tech as most of the Mag 7 reports this week and what key themes investors should be looking at. That's next. Stay with us.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
My man!
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. The tech trade is at a crossroads as we enter arguably one of the most consequential earning weeks of the season. On the one hand, we have a software sector in a tailspin, with legacy names struggling to prove they aren't being disrupted by the very AI that they helped build. On the other hand, the hyperscalers are preparing to drop a staggering roughly $700 billion capex bomb on the market if they can get the data centers built through a wave of community protests and power shortages. Joining us now to navigate this Silicon standoff is Tiernan Ray, CEO and publisher of the Technology Letter. Tiernan, now you say this is the Super Bowl week for these big data center race names. Who do you think emerges victorious this week?
We know, Marley, that on Wednesday evening we'll hear from 4 of these big names, right? Amazon, Alphabet, Meta, and Microsoft. And so far to date, Microsoft is the company that most people have seen struggling the most with resources, getting enough chips to run cloud services. Alphabet has generally been in the lead, and I don't expect a real change in that kind of pole position, with Alphabet leading and Microsoft maybe having some struggle.
All right, and a sentiment I heard echoed earlier on this show too, that Alphabet, one of our prime contenders to emerge victorious here. But as we talk about that massive capex spend, I've seen it between anywhere $680 billion to $720 billion. So we'll call it roughly $700 billion in capex, the expectation for the year. At what point does this aggressive growth start to look like potentially irrational overspending?
You know, the incident today of the Wall Street Journal writing about OpenAI possibly missing its internal targets is sort of a foreshadowing, Marley. When this company, if and when OpenAI files to go public, think about the fact they will be answering to public investors every 90 days. So Sarah Fryer, the CFO, will have to deliver a report on how's their growth and how's their outlook on someday having positive free cash flow. They've already pledged to spend an enormous amount in excess of what the company's currently worth, $852 billion. And I think if we see an IPO this year of OpenAI, Anthropic, and one for SpaceX, right, Elon Musk's kind of combination of companies. The three of those having to answer to public investors will really be a reality check, and it will start to cause people to get much more concrete about what have basically been sort of fantasy numbers today. It could be 700 billion, could be $1 trillion, et cetera, et cetera. It's when the rubber meets the road is when these companies have to file with the SEC and answer to public investors.
And you mentioned the road there, so I want to talk about some of the potential roadblocks to that spend. You know, we saw Project Blue in Arizona face physical protest with people lining up protesting the energy and water usage and the concerns there for the community. How much are these movements becoming a real material threat to the 2028 deployment times that we've seen laid out already by Microsoft and Alphabet?
It's significant in an election year, right? A midterm election year where people are going to be listening to constituents in their counties and hearing the disfavor about this. There are also issues of connecting to the grid, where these companies have to get permits, and then grid capacity has to be available. So yes, I think this local communities.
I'm here. Looks like we've got us a little wedge or flag, bull flag with another double bottom. So Marley has cleavage. Got some cleavage going on today. And I licked my lips. I'm gonna make a salad. Today's President Feta crumbles. Europe's leading cheese expert. Easy shaker. Shake that feta. And they're out painting the building. It's now 10:36. So we'll try it again. So far everything's been green. I really like it here. I like it, I love it, I want some more of it. I try so hard, but I can't rise above it. So the SPX now, the 7150s. Or the 7150s. 250. Damn it. There goes the power wash. There we go. Now it's setting up. I missed it just by a little bit. So we're going to give it a second here. 250 seems like the place. We got a 1, 2, 3, triple bottom, yay. Triple bottom. No, 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 they say. No, 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 I don't smoke it no more. I'm tired of waking up on the floor. No, thank you, please, it only makes me sneeze. No, 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 I don't smoke it no more. I'm tired of waking up on the floor. Thank God he got out. Relax and take a chill pill. You're in too deep. I got a triple bottom here at 230. And 71.50 strike. To the VWAP. Figure out what happened there, Rufflestiltskin. Are you being too impatient? Rejection, it's a rejection with my erection. No, yeah, yeah. Man, my voice is getting so much better. Hey, mama, R.I.S.P. Oh yeah, it'll be peace in the valley for me someday. It'll be peace in the valley for me. Oh Lord, I pray.
How can you turn your next mo into the ultimate experience? Visit participating comfortable dealerships for the ultimate.
Well, I'm tired and so weary, but I must go along till the Lord comes and calls me away. The morning is bright and the Lamb is the light, and the night is as fair as me. There will be peace in the valley for me someday. sun ever beams, and this valley of dreams, and no clouds there will ever be seen. There will be peace in the valley for me someday. There will be peace in the valley for me, oh Lord, I pray. There'll be no sadness, no sorrow, no trouble I see. There will be peace in the valley for me. Well, the band will be gentle, and the wolf will be tame, and the lion shall lay down by the way, and the beast from the wild shall be led by a child, and I'll be changed from this creature that I am. There will be peace in the valley for me someday. There will be peace in the valley for me, oh Lord, I pray. There'll be no sadness, no sorrow, no break out of this flame. Valley, oh me.
Come on, let's do it. Back to 220. We've had the 63, the 200, the 63. Come on, baby. Okay. You can't go much lower than this. Oh, there's my man. Always clean as Jim. Yeah. Okay. I've got, it's the back room. I walked in there today, it didn't feel as hot as it did yesterday. But I've got the computer room door open, and I've got the two thermostats, one inside there and the other one's by the door as you go in. And all you got to do is go into the front radiator and she'll let you through the crack of the door. And you see the first computer room, I've got the door open there. Which one? the computer room upstairs. Yeah, I got the furnace doors open. Yeah, they're unlocked too. Okay, you can call me back if you have any issues. You can't get in. Okay. Bye-bye. Come on, baby. Hold your own here. We're going to deal with our lad houses today. We got a baby wedge, still wedge. Not by much. If I don't hold this support, I'm out of it. Squeezing right now, so we should know something any minute. I was looking at TMOS, I kind of like that alert they gave us. T-Mobile signs joint venture deal with 2.7 billion fiber footprint expansion. So they're spending money. I'm at $2. This one even looks better. The SPX looks like a better one than SPY. Come on, baby. It's also a fallen wedge with a head and shoulders. So I think it's more important to break resistance than it is in the 63. I got an inverse head and shoulders with a fallen wedge. Let's break out and not a fake out. A 1'em, 2 bits, and a 3B. 1'em, 2'em, 3-4. Blick. I'll be right back. You know what? I'm gonna just blow this off. Kind of just sitting there right now. AI spending concerns. So spending was up 65%. They said the same thing last year. AI spending concerns. It boggles my mind. That's their excuse to bring the market down. Continued Middle West standoff and AI spending concerns. They have no clue that times are changing.
We broke out of the wedge. Come on, baby. Pick up some momentum. Jim, you're up $15. Should you sell your contracts? Jim, you're up $30. Should you sell your contracts? I think I'm going to go back down there again. Make my employees happy. Oh, that's so good. No, I've always never been a lover of sauerkraut. Then I bought some of this crispy sauerkraut. Oh, it's so delicious. Crispy. It's not really crispy, but it definitely has, you're able to eat it a little bit better. And have to chew it like gum. I think we're going to break the 100. Come on, do it. Target will be 71.36.11 to 71.38. Better get out even. UNH is having a good day. Okay, I'll be back. Oh, God, my phone's about to die. Ugh. That I didn't expect. Okay.
From Europe, because these people are all running out of oil. And Iran, it looks like, if I'm reading this right, the U.S. has blocked 38 Iranian ships from coming through the Strait of Hormuz, going to all these other countries. And so I think this is working, although we're waiting for some breakthrough on negotiations. Marco Rubio said the latest Iran offer is better, but not good enough, because they want to open the Strait of Hormuz and then delay negotiations on nuclear materials. So I think the good news is the pressure from the blockade on the Strait of Hormuz is starting to work, and I think people are getting more and more desperate. So I'm literally watching the news headlines, waiting for some headline to come out. You're right. Crude oil is off the highs. It was 101.85. I saw the futures just under 102. It's down back under 100, but only barely. So I think the rest of the trading community is waiting for some headline. Didn't get it yet, and so the pressure is still on the upside until
I'll be back.
Tom,
Tom, your take.
Then you throw in the fact that UAE is leaving OPEC at this point. They're about 9% of the capacity for OPEC, so this is probably strategic by them. But Kevin's right. This proposal that Iran comes back with is, hey, these are international waters in the Straits of Hormuz. There is no way that the U.S. is going to allow Iran to have any, say-so in who goes through, who pays a toll, who doesn't. And this blockade's starting to take an impact. It's what, $500 million a day? And if they start pulling back on, allowing these ships to go through the blockade, and they already have, as Kevin mentioned, that's going to put, a boot in the neck of Iran at this point. Now, will other countries like China and some of these Southeastern Asian countries, India, and some others start to put more pressure on Iran, or do they just kind of go against the U.S.? Because you know what? We're independent as far as energy goes, right? And that's a benefit to us. They said there's like 60 empty super tankers traveling to the Gulf of Mexico right now to fill up. So this is actually going to be a benefit for the U.S. where we don't have to resolve this conflict anytime soon, that Iran is going to have to be the first country to break, where they're going to have to negotiate the way that the U.S. wants, and that would be a positive. But the longer this gets dragged out, we've kind of pushed aside the fact that, hey, maybe these inflationary pressures aren't going to be as bad as we initially thought, but they're still going to negatively impact on the corporate side and on the consumer side moving forward. We just haven't seen any glaring weakness in any of those, from either the corporate side or the consumer side at this point.
Yeah, the corporate side definitely seems to be holding up, and even the consumer seems to be resilient so far. All right, guys, let's put a pin in it. We've got bull versus bear coming up. The guys will get their example trades put together for Seagate. It's seen shares more than double this year. We'll have more Fast Market after this break.
This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now.
Schwab. Invest your way with Schwab.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. Seagate next on deck to release its quarterly report card after the close of trading today. Analysts are expecting the company to report earnings of $3.50 per share on an adjusted basis. Revenue is expected to clock in at nearly $3 billion. Investors will keenly be watching guidance, especially given the performance of shares. That stock has more than doubled this year. It's up about 600% year over year amid that boom in memory stocks. All right, time now for the tug of war on Seagate. For that, let's welcome back in our co-hosts, Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, got to get your thoughts on Seagate and, of course, the memory boom. Kevin, we'll start with you. Your take.
Look at the chart on Seagate, and you see where they are in terms of AI, and just look at the move today, which means add that name of Seagate to the list of names affected by that AI story today, OpenAI story. So listen, I had to look up what this is. HAMR is what they're in data storage, they're in infrastructure, and their new product, it's called heat assisted magnetic recording. And so it heats up the disk and allows more storage on that disk. So this is in production. Hyperscalers are buying it and in line with them. So they are waist deep in the AI infrastructure game, and their stock will go up, and as it's doing today, they'll come down as long as this AI infrastructure game keeps going. So yeah, this is a company, but it's doing extremely well, lots of business, but look at that, the chart of this stock, Diane, it's absurd.
All right, Tom, your take on Seagate.
Yeah, it's had a nice rally over the past 12 months, but all these storage and memory chip stocks have. And Kevin mentioned that HAMR technology that they have. They're already sold out through 2026 with that new product. And then you start taking a look at it. AI storage demand remains the biggest driver. The Seagate's high-capacity drives are used to store those huge data sets. We always talk about the energy needed for a lot of these hyperscalers. Well, that goes right into what Seagate does, and that's storage, hard disk drive storage at this point, and they're sold out through this year. And then you know what? The demand side has already allowed them to increase margins, increase pricing, and that's the key, I think, for this company. Now, it's already had a great run. Valuation's starting to expand a little bit, but at the same time, the E part of the PE continues to grow, and that's why I think all the sell-side analysts are pretty fired up about this upcoming report, because they expect another earnings beat on the top and bottom lines and another raise as far as guidance goes. The only thorn in the side, I think, that might come through this earnings, or could possibly come through this earnings, is that don't have enough supply at this point. Supply constraints would, kind of damper sales. Do customers look in other areas for, storage? That might be a concern, but right now you can't argue with the price action of the chart, and I think that's what a lot of people are saying. And it seems like every other day we've got price target hikes from the sell-side analysts. There was just one yesterday up to 700 out of Cantor Fitzgerald from 650, stating that this is going to be another great quarter for the company. But that doesn't mean that the stock's going to go higher post-earnings, just due to the fact that, hey, it's a good quarter, because we've seen that play out before in tech.
They're not the only ones who raised theirs to 700. BofA also raised it to 700 as well yesterday, and so too did Wedbush. Morgan Stanley out with an adjustment to its price target. It's closer to where it is now, but it is overweight. It set a $582 price target. All right, let's jump into the example trades. Kevin, what's your approach today?
So I looked at something just simply because yesterday, Tom and Diane, yesterday the stock was overbought. It was a 76 on the RSI. Now it's down over 4%. It's down about $27. So it's not overbought anymore, but that's why I looked at something in the bearish camp. And so I looked at the expected one-day move, about $54. And you round up, if you think about $50 and $5.70 on the stock, I looked at a 1 week 5/20 put calendar. So I bought the May 8th 5/20 put, sold the May 1st 5/20 put. That was trading around 580s, trading closer to 5.5 now as the stock has settled down here a little bit. But still, this is something that would, you're long Vega, going into the earnings event, you're buying a lower implied volatility, 108, selling 151. So you're buying, medium price implied volatility, selling extremely high, the event-driven implied volatility. So Downside put calendar, Tom, looking for something around $50 on the downside towards $520 strike.
Yeah, and you see there from the risk profile on Kevin's example trade, yeah, Apex is out right at the strike that you're doing, the 1 week wide. Put calendar to the downside, but let's break this one down. Buying that May 8th weekly 520 put, selling that same 520 put in the near term May 1st weekly options that expire this Friday in 3 days. Paying roughly about a 580 debit, as Kevin mentioned, might be a little bit lower, but price discovery warranted on pricing because the bid-ask spreads on the individual options are pretty wide on this one. But if you pay that 580 debit, there's your risk, $580 per spread. Your break-evens on this, while you want 520, that's where you get the apex of profitability. You probably got a range between maybe 480 on the downside, maybe 560 on the upside, anywhere around those numbers where this thing could expand. I think one of the keys in Kevin's trade is, yeah, that 520 strike, that's about $50 out of the money to the downside, sets up with that one standard deviation move. But there's over $11 worth of option premium in the 520 put that you're selling that, hey, if it stays above 520 over the next 3 days, that thing's going to go to zero. So that elevated implied volatility due to the event risk of earnings has a lot of option premium in these out-of-the-money puts that you're selling and actually buying also. But you're buying, as Kevin mentioned, you're buying that lower implied volatility. So this gives you downside exposure for $580 in risk in there. But yeah, you want it to go to 520, but hey, you've still got a good range of maybe $30 to $40 on either side of that 520 to be potentially profitable on this really short-term positioning. Do have some assignment risk on that 520 put that expires in 3 days, so keep that in mind also. But a way to get exposure to the downside, staying risk-defying there on the long put calendar 1 week wide. I went a little bit more passive here, Kevin, on my example trade. Went out to the May 1st weekly option, so really short-term positioning. If you think the stock's going to maybe stay above a specific level, I looked at selling a neutral to bullish put vertical that gives me a better probability of success on this. I sold the May 1st weekly 520 put, bought the 500 put, collecting a credit of roughly $4. You might be able to collect about $4.50, maybe even $5 on this one. But if you collect a $4 credit, that's what you can make. $400 per spread with $1,600 in risk on this one. Now, it takes your break even down to $516 down to the downside. So that's outside of that one standard deviation range, that break even point. And the probability, Kevin, that that 520 strike is going to be out of the money is about 71.5% to the downside. So yeah, the stock goes higher, stock consolidates around these levels, or even goes lower but remains above that 516 level. You can be profitable on this one, Kevin. A little bit more risk, but better probabilities.
Yeah, think about it. Your break even on this trade is $516. If the stock goes nowhere, you're profitable. If the stock goes up, obviously you're profitable. If it comes down but stays above 520, you're profitable. 3 of the 4 scenarios and you're still profitable here. But that trade-off on that, because it's so advantageous in terms of probabilities, is the risk. If it does go below 516, there's risk all the way down to 500, but it is risk defined, it is collecting theta, and because of the event, you're selling the high implied volatility, so you're short Vega as well, Tom.
Yeah, and I think one of the keys is when looking at selling a put vertical like this, you've got more risk than your potential reward, but you've got better probabilities. The IV percentile rank in STX right now is about 97%, so we're in the top 5% of implied volatility levels that we've seen over the last 52 weeks. So that allows you to collect more option premium for these more passive, conservative type strategies. That's still directional, right? It's still a neutral to bullish type of stance on this, but taking advantage of those high implied volatility levels. So there you go, Diane. Hey, the stock goes down to 521 over the next couple of days. Both of these trades work out pretty nicely.
All right, so there is a parallel there. We've got cash tags coming up. We'll cross over to the consumer with the team from Lifefolio. They'll be along with new sentiment data on Starbucks. Is it due for a Java jolt? We'll see. Keep it right here on Schwab Network. Fast Market. We'll be right back.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome back to Fast Market here on the Schwab Network. I'm Diane Kinghall alongside Kevin Hinks over at the CBO. Time now for our Cash Tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio, taking a look at new sentiment data for Starbucks. All right, let's get right into this, Andy. Are things actually perking up for the Java Giant based on your latest results?
Yeah, they're perking up a little bit, but not as much as they're losing ground to competitors. When we look at Starbucks, Likefolio consumer demand data, web visits are down 9% year over year, which we kind of expect because so many people have migrated to the app and app usage is pretty good. But Dutch Bros up 22% pretty much tells the story of these competent competitors that have come into the space and really undercut the Starbucks brand value. I think Starbucks really has a brand problem here. I think Brian Nichols is trying to fix this, but and it's working a little bit. Same store sales a little bit are up a little bit year over year, but not as much as these competitors. And all while Starbucks input costs, both labor and the coffee beans are going up, and so we think Starbucks is in a considerable bit of trouble here. We knew that when Nichols took over. Wall Street is betting on, the Nichols magic to take hold again, and it probably will over time, but it's just not yet. And so when we watch, Dutch Bros, Seven Brew, etc., some of these come along and really steal that market share, that mind share. Those, habitual buyers have switched, and it's tough to get them back in the fold. So, we think Starbucks turnaround story has started. It's just not taking place nearly as quickly as Wall Street or the Starbucks executive team would like.
Andy, Brian Nichols has a history of fixing things, and it looks like, based on the stock, that people are starting to warm up to the turnaround, but you've got very conflicting charts that Likefolio is giving us today. It's awesome, but it's conflicting, right? Yeah. You've got divergence between the demand and the stock, and that looks very favorable for Starbucks. But then you've got the competition factor with Dutch Brothers, and that doesn't look very favorable. So here's my question to Andy Swan. Which one outweighs the other, right? Is it the competition, or is it the fact that, remember, on the scale of Starbucks, Dutch Brothers probably can't compete on the scale if Starbucks were to get it right. But just like we've seen with Nike in the shoe business. The little guys don't stay little for very long if you don't pay attention to them.
Yeah, no, that's exactly right. You know, I think the biggest story here is the uphill climb that Starbucks has in front of it is, I think, larger than we think. So it's not just, you know, can Starbucks turn around and deliver a better customer experience, better profitability, etc. I think the answer to that is probably yes. But there's also just this macro, this enormous headwind of competition. It's not just Dutch Bros, it's Dunkin', it's McDonald's. You know, McDonald's recently overtook Starbucks as the world's most valuable restaurant brand in terms of brand, brand value. And so I think that consumers have just seen alternatives and changed their daily routines, and that's very difficult to win back. So yes, their competitors, you know, like Dutch Bros, etc., are small, but they've also got very large, very competent competitors in Dunkin' and McDonald's, and they're also have lost ground to them and lost consumer mindshare, which is really concerning because it's very difficult to win that back. We don't bet against Brian Nickel, but you know, it's going to be a slow sled up this hill, and it's going to be difficult to do. And I think that's probably what we're going to hear from management in the call after they put up some pretty decent numbers.
Is part of this the trend that's happened here, a price elasticity feature here? Because, you know, once upon a time I was one of those habitual Starbucks. I went there pretty much Monday through Friday. Now I'm not habitual, but the competition is my kitchen, basically. So, you know, I will still go sometimes. But it's more of just making the coffee at home. And I think about the price. I mean, once upon a time it was like $4. Now it's $8 for your drink. Is that some of the challenge that's happening here?
Absolutely. Starbucks. It's gotten very expensive to go to Starbucks, especially if you got a little treat while you were there. You know, what used to be, like you said, a $4 to $7 trip for a lot of people has turned into a $17 to $20 trip. And when, you know, wallets are starting to get stretched, it's one of those things that's pretty easy to cut out and see how you can save, you know, $100 a week, which is substantial. So that's definitely a part of it. And, you know, I also think that Starbucks just has this ongoing challenge with its workers, their expectations, the input costs. There's a lot of battles to be fought at once for Starbucks, and you know, retaining and reinvigorating the brand is just one of them that they're having a little trouble with, and there's still a lot of other battles that they've got to fight at the same time. So it's a difficult time to be the CEO or executive at Starbucks. I think Brian Nickel is absolutely the right guy, absolutely proven to do this. But it's going to take some time, and I don't think that that's what Wall Street wants to hear, given a very, very high premium that's being put on this stock in terms of its PE ratios and et cetera. So it's expensive. Wall Street's expecting a lot, and it's going to take a longer time than they think, I believe, for Starbucks to deliver.
And Andy, real quick, because I know Tom will want to know this. Do you have an earnings score on this one?
Yeah, we're bearish going into this. We think, especially given the way the market's reacting to a lot of these earnings reports right now, it's kind of sell first and ask questions later. So if there's anything that they come out with and say it's going to take longer or things aren't going quite as well as we hoped, we think that they sell the stock pretty quickly.
Andy, that's Andy Swan, co-founder of Likefolio, with the latest look at Starbucks. Now, for the trading perspective on the Java Giant, let's bring Tom back into the fold. So, Tom, you got some insights from the Likefolio team. Your thoughts before you guys get into the example trade?
Well, if they hit their mark of, EPS estimate of about 44 cents, that would be the first quarter year-over-year growth since December of 2023. We're 2 years into this Brian Nickel turnaround story that just isn't taking place. I think he's trying to do the right things as far as, you know, they put stuff on your cups now. They write little messages. You know, they're trying to make it more of what Starbucks used to be. So that's the positive side of it. But you start looking at the cost, and then you saw Andy's chart with, you know, the competition's coming for them. Luckin Coffee's back here now. You got Dutch Bros, which is doing really well. So that's concerns on that front. China, you know, how will those numbers come out? That'll negatively or positively impact their results also. I know that they're trying to divest some of that over there and have a partnership over there in China. So there's a lot of variables here going into this report. But Kevin, you look at it, I mean, the stock basically, what, year to date, it's up 15%, but over the past year, it's still up only 15%. And it seems like we're consolidating here around 97. How do you want to look at this at Starbucks going into this report?
Yeah, there's so many mixed messages here with the data that you're getting. Some of it looks better, some of it looks very concerning. But the one thing that really sticks out as me is, you know, David and Goliath is a famous story, not because Goliath won. Remember that. It's because the smaller guy won. And so when you look at the competition, they should be worried about that. And Brian Nichol, who's got a history of turning companies around, he'll probably do as good a job as possible. We'll see if it's enough. So, Tom, I looked at the information. Let's face it, I have no idea where the stock is going. They could put up good numbers, or they could have to realize or admit that there's competition out there. And so I looked at something, I looked at the expected move around just under $6, let's call it $5.50. And I looked at the 1 week double calendar, the 103 call, the 92 put, $5.50 times 2 is $11. My strikes are $11 wide, Tom. 103 on the call side, 92 on the put side, Tom.
Here we go again.
I'm pretty flat in terms of delta. I want a $5 or $6 move towards one of those strikes. I have no idea where the stock is going, Tom.
Yeah, let's look at this double calendar example trade here where, hey, you want it to move about 1 standard deviation, but you don't care if it's to the upside or the downside. In the May 8th weekly options, you're buying the 103 call and buying the 92 strike put, selling those same options, the 92 put and 103 call, in the near term May 1st weekly options that expire in 3 days. Paying roughly, we got $1.50 debit on here, probably get it a lot less, closer to $1, maybe $1.05 at this point. Price discovery warranted. We got some wide bid-ask spreads on the individual options, but this double calendar position, low cost entry point to get some exposure either to the upside or to the downside. You just wanted to move about that 1 standard deviation. While the apex of profitability is at either the 92 strike or up at the 103 strike, you still got a range between maybe $89 on the downside and 108 on the upside that you could potentially be profitable. What you don't want to happen on this type of strategy is you don't want the stock to sit right here around 96, 97, or you don't want maybe a 2 standard deviation move, maybe a $10, $12 move to the upside or downside. That's when you start losing profitability on the wings on this type of strategy. But this also, because it's in the calendar family, but it's a double calendar, it takes advantage of that vol dispersion we always talk about. You've got elevated implied volatility in the near-term options that you're selling, about 87% on aggregate in those 92 put and 103 call, and then buying about a 54% implied volatility on aggregate in those same options. So that dispersion lowers the entry point price, but the debit you pay is going to be a risk. So if you pay $1.50, $150, if you pay $1, $100 to get some upside or downside exposure. So if you think about it, Diane, it kind of sets up with like Folio's kind of outlook on this company that, hey, maybe they will be profitable on an EPS basis for the first time in a couple of years, but at the same time, if we do see some weakness, this gives you some exposure to the downside also.
Yeah, we'll see, to your point about where things are with that turnaround off the back of its results. Let's stick with the consumer. We've got the breakdown coming up. We'll take a look at Visa ahead of its quarterly results. We'll get another read on the consumer. We'll have more Fast Market after this break.
into the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Hey, Bob.
Hey, Pop.
My dad had a stroke.
I'm waiting for the big rebound.
And I've always seen as a force in our family be vulnerable.
Vulnerable.
Yes.
Yeah, I said it. 8 takes. I got it out, Daddy.
What can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Did he teach you the word vulnerable? Vulnerable. Well, well, well. I don't have a lot of money in these 230s, 7150s, but I'm still holding. We did break out of the wedge and pull back and retest. Now this is number 5. 1 of them, 2 bits, 3 bits, 4 bits, 5. The rules is it takes a nosedive, but I have a fallen wedge. So, let's get rid of that. I put that one on the wrong side. Remove. United Healthcare. We got Lilly coming up. I didn't even have time to look at Lilly. Might go over the watch list. Lilly broke a new low. We have a 1, 2, 3 coming up on it. Glad I took my USO puts out 3 months ago. Is it up? I got a booger in my nose, won't you pick it? I got a booger in my nose, won't you pick it? Getting ready to have another storm. We got another severe thunderstorm, so I might have to shut this down if it starts hailing. Nope, there goes a blink. I'm not liking this. The silence of the storm. Oh, and I'm getting up. Okay, we had a little breakout here to 210. Where are you? 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 $210.70. I think I'll add on. Always when I add on after a breakout, I get burned, so I'm going to give it a second. See if I can get cheap. Come on, baby. I doubt if anybody's in this trade with Bobo. I got a 3 at 220, 230, and 9 at a buck. Make money. Come on, break it. Oh, yeah. Come on, baby. I'm even. $133. Come on, baby. We need to break here. I got I had right around, which one are you looking at? SPY. I had 710. Now I have 710.57. It's raining. Fuck, if I got my window up. It's a hailing. Pretty good sized ones. We had golf ball the other day. Randy. Lily dropped down more. America's not good at sometimes at backing up their peace treaties like they did with Ukraine. They took away Ukraine's nuclear stuff and said that we'd help them against Russia years ago. And I think Obama sent them blankets. Biden sent them bombs. Trump sent them some missiles. And I think that's what Iran's probably afraid of. They've got so much shit. They got so many enemies that they have to have some kind of protection. Again, I wish I'd put my car into the carport. That stopped. Hope I rolled that window up. I know I did, but I gotta go out and check. Now the sun's shining. Fuck. Now I'm back down again. I had my chance to get out of it, and I didn't do it. Gonna be a long day. I'm gonna go through my watch list while I'm watching this one. And the green ones today will be the VIX, Oxy's green, Kroger. Kroger had earnings. No, it didn't. And that was Coke. Food. It's had a pullback. I remember complaining about that last bounce. Looks like we had a triple top, or almost a quad. Next, we have Apple, which I called out yesterday. Joby up 6 cents, TNX. Here's PANW. We're at the 200 on it, so we're at resistance. Clear. JP Morgan's up 74 cents, then Walmart's up 2 pennies. Today's loser is AVGO, and it's had a huge run. Hims, Marvell. Marvell had a huge run. So it just overnight just doesn't become bearish when this news is the same old news over and over and over again. Another probably 10% correction. But this had a huge run, Marvell did. So did AMD. Off the 200 when I called that out. TSM is at support, but I don't know. We have hit the 200 SMA on Oracle. So we hit resistance. Regetta, 200 EMA. Nvidia pulled back to my support that I called today. Could go a little lower, and it did go a little lower to them two bodies there. Mr. Potstock Moses. That's the one you want to trade when you have the breakouts. Oh, AMC. I'm going to go through the rest of these. Coin. Coin's got a gap fill off the 50 SMA. Chipotle down 40. CCL. Meta. See where Meta is. Where the fuck did you go? Come on. Quit moving around on me. Was the thing frozen up on me? Oh. Meta's nothing yet. Done nothing yet. Home Depot. Let's see if this is the daily or weekly. Those are all the weekly. Home Depot looks the closest. We had 3 black crows here on the pullback. Well, now this one's too far out of the money. Six notches out of the money and I'm out of my stripe. So UPS had earnings. God. The new resistance on the SPY is 710.34 to break. Magnum Corner, 54 inch. Anybody ever heard of them lawnmowers? I'm out to buy me a new one. Magnum Corner, 54 inch. For $4,000. That's the bad boy. Magnum Corner. Let me see. Oh. Always clean as Jim. Oh. Are you there?
Yeah, I'm here.
Yeah. How may I help you?
Do you know where 13 is by System 13?
I think it's in the upstairs, not on the left side, but on the right side, on the back wall.
Okay.
Did you see it?
I'll go check that.
I'll run up. I think 3 was that big one that went sideways.
Yeah, well, 13's in the mechanical room on the right side, if that's what you were talking about.
Yeah, I think so.
But I was looking for the thermostat in particular for that one.
There's that one in the hallway downstairs that I showed you, that second one.
Yeah.
I'll
check it.
That was 13.
I didn't know. What about that
Huh?
unit on the east end of the building? Is that a system?
Is that a system?
Yeah, you have to come in it from outside.
Huh.
I know I put a thermostat on it a couple of years back, or what it was.
Well, I'll run down there and have a chat with you for a second.
Oh, okay.
I'm just a few minutes away.
Okay, no problem.
Yep, bye.
Okay, thanks.
Okay, here I go again. Off to see the wizard, the wonderful Wizard of Oz. Because. That's the only thing I can do. Oh, you're still on the phone. So you did. Oh, God. Let me get on the TV. Here I go again.
Spice up your mower, simply head over to Bad Boys. On the website, they have chute blockers, LED light bars, electric switches, sound bars, storage containers, mulching kits, you name it.
Above 525 by week's end, and if that's the case, collecting $1.25, Jenny, which means max profit is 125, as we can see there. Break even 523.75.
Damn it.
And then max loss 375. So that risk reward relationship is 3-to-1. You risk 3 times as much as the max profit potential. And so what we should first think is, okay, that makes sense because we're quite a bit below the current share price. There's several now outcomes that can be profitable. It can go down small or less than expected. It can stay unchanged, or it can go up in any way, and by the end of the week, this would be above 525, and it could be profitable. It is risk defined though, so even if the stock plunges Spotify-like or even beyond, and then of course you'd be defined to that max loss, it can't do worse than that. So even below 520, no harm beyond that 375.
So risk defined, which is very important here, as you did mention, of course, if we see things, tumble a bit or see, obviously, I mean, huge upside. It's sort of anyone's guess when it comes to some of these memory names that have been on a run, which also has been the case for Bloom Energy. And so definitely gaining from some of the alternative energy need and frankly demand that has risen as a result of the growing infrastructure concerns around energy with AI data centers. But walk us through this move, because this name has been, I mean, on a run as of late as well. I mean, also up over 60% this month.
Yeah, during the past year, up 1,000, almost 1,080% or so roughly. So really explosive move to the upside once again. So to focus on the nearer term price activity and the more recent price activity, we can see here that we had a notable high point around 176. That's about where we had a resistance area established here. That's also where we had the beginning of a gap up. That gap came in then at 198. So 176 to 198 is an area to keep an eye on here. Our blue trend line has seeming like it was going to be broken today, but you could also say that we have a shorter term white channel between these two lines here. Oftentimes it makes sense to restart trend lines after a significant gap or after an earnings event or some kind of major change in our fundamental picture, our price activity here. The highs came in here, 242.20, so that would be the boundary to the upside to keep track of. Meanwhile, our lows today came in at 216, so that is another short-term supportive area that traders could keep track of. So our moving average in this case, we're quite close to our 5-day EMA, but we did slip below it today. Our dark blue line here comes in at 228 roughly. Our teal 21-day monthly EMA comes in at about 198. RSI showed a touch of bearish divergence here. Price made a higher close, but RSI was trending downward here, so starting to lag a bit in this case from here to here as well. So now we've seen the situation where the RSI has sank below that 70 level once again. So a kind of a modestly bearish signal here, but as I said, this can be a common situation that happens like this. So now we have our volume profile study here. The area in question that's nearest to our price activity comes in at about 133 to 160. Much heavier trading here. Then you can see the relatively light area in this region here that signifies the gap and the more thinly traded names, rather price levels here. But a smaller pocket of activity coming in around 230 and around 215 as well. Those would be some other areas to watch out for.
Okay, yeah, and also seeing some weakness today, down just shy of 4% actually on the session here. So two names making some big moves to the downside actually into these earnings events. But so appreciate it to Rick Ducat for all of that technical setup. So last but not least, when we think through now trading Bloom Energy for example purposes, this is another one where I would say buyer beware of, like, you need to be risk defined given some of the expectations for these companies.
Yeah, and the options are going to be priced with that in mind, right? Expensive premiums, because the thought is that the movement potential is greater on these type of names. So with that in mind, very similar strategies, selling a neutral to bullish put vertical below the market, going with the trend, but acknowledging that risk around this event. End of the week is when this expires, May 1st. It's the 200, 195 short put vertical, so $5 wide. Similar $1.25 credit, which means that risk reward, again, 3 to 1. Risk 375 with a chance to make 125, and that break even at 198.75. So different prices, but the same output here, looking for this stock to be above 200 by the end of the week.
And I needed a refresher that the end of this week is already May. So if looking at some of these month-end expirations, we are definitely approaching the end of April rather quickly here. Something to keep on the radar, but both names we will be watching very closely when they report after the closing bell today. We will leave it there for Chartmaster today, though. Now coming up next, time to finally dive into the numbers we've been talking about throughout the show. That is Spotify, pacing for one of its worst days in almost 2 years. The shares are now down about 14.3% on some disappointing guidance, particularly in its premium subscribers.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going?
First day, so... Sometimes, you know...
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Next Gen Investing. It's now time for FOMO. Today we are diving into the over 14% move lower in Spotify, which is seeing some substantial weakness as a result of some weak guidance, particularly around its premium subscriber growth expectations. So joining us now is Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. And so Jeff, walk us through what went well, what clearly did not go well, because from seeing these numbers and briefly touching on some of their bright spots, there was still things to like in this report, no doubt. But unfortunately, seeing the Bears win here a bit, we're down over 14.5%.
You're absolutely right. Seeing the move today, it is certainly not coming from profitability. That came in relatively well. It was the weak outlook, which kind of focused on slower subscriber growth, as well as some higher spending. That's the combination that's causing the sell-off we're seeing today. What's important to know as we come into this earnings report is that they had a massive run from 2023 into early 2025. A lot of that optimism has been priced in. That subscriber growth, pricing power, margin expansion has already been built into the shares. So these reports are, the reaction can be negative, even if we see decent numbers. We saw them beat on earnings per share. We saw revenue miss, but just slightly at $5.31 billion versus the $5.36 expected, still up 8% year over year. Monthly active users beat at 761 million, and premium subscribers was really in line at about 293 million, up about 9% year over year. If we look at the revenue from those different segments, premium revenue was up 10%, while ad-supported was down about 5%. The guidance, as you talked about, is the real kicker here. Revenue expected for Q2 around 5.54 billion to 5.65 billion. Monthly active users, verse 5.65 billion, so a slight miss there. Monthly active users, 778 million versus 774 expected. And then premium subscribers expectations are 299 million. Many analysts were looking for more than 300 million out of that number. So subscriber growth is the main issue that we're seeing on this guidance.
Jeff, was there any silver linings that either you or any analysts were pointing out as you're kind of combing through these numbers? Sometimes it's hard to put lipstick on the pig if the stock's down 14%. I get it, but maybe something to give the bulls some pause here.
I think some of the context out of management certainly helps. They're still calling 2026 a year of healthy subscriber growth. They're saying that's going to be weighted on the back half of the year. They did point out prior growth was boosted in part by the iOS app changes we saw in the US, and they've talked a lot about this continued investment in AI and product innovation. That, of course, is still a concern because it could pressure some near-term operating income. That said, pricing power, they've proven they have the ability to raise prices without churn. We saw them raise prices in January. Their scale, those 761 million monthly active users, really shows that they have the ability to improve, the quality of their product and continue to build on that. Margin expansion, they're now above 30%. Free cash flow is strong and improving. And when you look at the platform expansion, audio, AI, fitness, it's really building quite an ecosystem, which I think is a very positive thing if you're looking in the long term.
Okay, and so I will say from also diving into these numbers myself is that there was some mention over the fact that they've raised prices, and are we seeing some of that pricing fatigue now play out in real time? And I've seen analysts sort of divulge that as either a positive or a negative, where some could make the argument based on just their total user count. They're actually not really seeing any meaningful drop off, but then those that are looking to explain really some of that miss in premium subs seem to think it's because of prices going up. And I mean, pricing power is something I've said that this name has had for quite some time. There's nothing like it. It's the cheapest way to stream music, audiobooks, podcasts, etc. It's very integral in my own life, but are you starting to see any of that pricing fatigue really play out into the results? Because again, I've heard both sides of the coin sort of echoed as a result of these results today.
Yeah, it's a good question. Historically, we've seen very little churn. We haven't seen it show up because of the price increases. But the question, of course, investors are wanting to know is, are the consumers going to start to push back, especially in this tighter macro environment? Also, probably looking for a little bit of diversification, between their premium and ad-supported revenue. Premium revenue is really what makes up a lot of their business. Ad-supported revenue, not as much, and that was down 5% in this last quarter. We know that the spending's going on. Is that going to translate into higher margins as they continue to add these new features? And keep in mind, this is all while they have these huge competitors. You think of Apple, you think of YouTube, those names that are all attempting to add the same, features that we're seeing come out of Spotify.
Jeff, in your mind, is this in a vacuum here? I know we got a bunch of big earnings that we're going to talk about more as the show goes on in the next, 48 hours. Do you think this is a preview of maybe what's to come, or should we separate this from maybe what we'll hear from some of these Magnificent Seven names?
Yeah, it's a good question. I think for now I would separate it, right? This is a very interesting story. You think immediately, let's compare Spotify to Netflix, for example. The business models are so different, really, when you dig into the details, how they started. One had a paywall, one didn't. How they, monetize what they offer. So for now, I would look at this as an individual story and not read too much into what we're seeing. And keep in mind, they are still saying the second half of the year we should see an improvement on the subscriber side, and that will really tell the story here for Spotify. And potentially, we can start to look at other companies from the lens of what's going on with Spotify as well.
Yeah, and I think an interesting comparison, we so often want to compare the streamers, but I agree. These are fully different business models at this point. And also, this is not a US-based company, which not like that matters to earnings, but it does play into some of the international scope, where Netflix is still fairly under-penetrated in several of these key countries. And so different but similar moves post-earnings, I will say. So we'll leave it there. So appreciate it, Jeff Pierce, for all of that breakdown. Now down about 14.6% here on the session. So when you look at trading now, Spotify, for example purposes, this was an un-Spotify-like move. To not put that eloquently, but I mean, this name had been unstoppable, and unfortunately, it does feel like over the past several months and over the past year, you've seen a bit more of an appetite for growth, which frankly, some of the growth metrics going forward disappoint.
Yeah, and I know Spotify, at least I don't think it is, isn't in the S&P 500, and if it is, then it's factored in here, but right now you have about a 79% beat rate through 170, so let's call it 1/3 of the S&P 500. The price reaction on average in 1 day now is close to flat. It's up 0.08%, so let's call that 0.1%, which to me is saying you kind of got historic levels of numbers again, and it's not enough. So as Spotify, I think, lays out, this very much
all right, I'm in the green.
Driven earnings season.
I want a lot of money.
Really critical as the week rolls on. As far as trading goes, 14% down is 14% down.
Where it went? Oh, come on, break it. Break the VWAP, please. Here's the SPX over here. So I go to my other one. We broke the 200. That's a good sign. I'm staying in it. Might be able to get to the VWAP on the /ES. It's payday. Well.
this week. Raspberries, Greek yogurt, light strength cheese, broccoli.
Can't tell you how many times I danced to this baby. Oh yeah. My boogie shoes. My boogie shoes. I want you to break out for me, baby. Give me a little my boogie shoes. My boogie shoes. Can't play disco. My boogie shoes. Oh, come on, baby. My boogie shoes. I wanna put on my boogie shoes. Yeah. This is a song I played with Ozark Mountain Daredevils. Stay above the 200. Let's go to VWAP on the /ES. By the wind. Fly. Hallelujah, fly away. Carried away by the wind. We gotta hold this support. Gotta fly away, hallelujah, fly away. Let's have a nice breakout. Give me $2, please. That'd be $700, 700, 800. I want it now. Take me to the VWAP on the /ES. Oh! Is anybody in? Calls with Bobo. I hope so. Whoa. I'm up $450. Come on, baby. There it is, $2. How does he do it? Come railway. It hit $2. The crowd's going wild here at the sports arena.
Card is a no-fee credit card that you can apply for right from the wallet app.
No credit cards, please. As you expected, very good. No news. Just Iran's trying to wiggle its way. FDA turns an AI to speed up clinical trials. Google drops out of Pentagon drone swarm contest after advancing. No, I don't see no news. I didn't get out of my $2 though. We hit the VWAP on the SPY. So we had a wedge and a symmetrical flag breakout. We broke out of the wedge and we broke out of the symmetrical flag. And I'm going to show you a trick. My famous 1, 2, 3, 1, 2, 3, 4 trick that I talk about quite often that keeps me confident in the trade. Prepare ye in the name of the Lord. One bis, two bits, 3B, 1, 2, 3. You could trade with me. 1 of them, 2 of them, 3 of them, 4 of them, you might make a little bit more. So if you can count to 3, you can trade with me, and if you can count to 4, you just might make a little bit more. Fallen wedge. 1, 2, 3. 1, 2, 3, 4. If you can count to 3, you can trade with me, and if you can count to 4, you might make a little bit more. You know what would be nice? A tweet that so I get a message earlier that says CBC, CBS, which you can't trust. News producers in Tehran says country does not appear to be in a state of collapse by many standards at all. When you're choked off $100 million a day, I have a feeling that you're in some dire straits. But I don't know. That's just something. And I can't believe anything from CBS. Come on, baby. 155. Now, maybe could have got, I don't think I could have got $2 like I wanted. It was only there for a short bit. Man, this looks strong. We're going to know here any second. I don't want it to pull back down again. I want to keep this momentum going here. But new low on Home Depot. Mister's at the 200. Here we go back down again. Hope support. That looked real strong right there. This one's a little choppy, but still want to count it as an ascending triangle. Back to even again. This has been a roller coaster for me. Is anybody still in the calls, or anybody in them at all? Randy? What? Bug. How dare you? We're going to hit the 63 on the 5 minute. TTM squeezes in my favor. Had a long squeeze. About 3 times the squeeze it should have. Can't wait to watch Ronda Rousey get her ass kicked with one kick. That woman can kick. Gina. They'll crack her frickin' ribs. Oh, Mama, I'm excited. I'm almost out of breath. Okay, we got 6 minutes till the worst hour of my life hits. Good job, Bobby. Good job, Bobby. I want the Big Daddy breakout here. I have a feeling that if I sell these, I'm going to really regret it.
Good job, Bobby.
Oh. Here we go, Bobby.
Good job, Bobby. I want the Big Daddy breakout here. I have a feeling that
Where in hell's the mute button?
I'm gonna really regret it. Good job, Bobby. Oh.
Good job, Bobby.
Here we go, Bobby. Good job, Bobby.
We broke out. Jimmy said it looked powerful. I just need to make some money. See, I'm just a little bit too far out of the money. If I was a little bit closer, I'd be a lot more happier. So I'll stick this out, see if I can get a little more out of it and get out of the trade. I'm up 20, well, there's 60. 27 bucks a contract. Boom! 175. Come on. Jim, you're at $42 a contract. Have you ever thought about selling? No. I got a little bit of hail damage on my car. So
I need approval.
what? About 4 or 5 bumps. She keeps wanting to go. We're at the 63 now there, bug. Break it. If this breaks it, I'll get my $200. But I've got now I'm in the money by a slot. So you got to make a business decision. If you can count to 3, you can trade with me. On the 5-minute, we got a 3, and we got a 2 and a 3. Come on, baby. I need you. What's that old song? I can't remember that old. I need you.
If you are facing advanced non-small cell lung cancer.
Because the juggle is real. Because you're only human, there's hills.
Chevy trucks are as capable and dependable as the Chevy people who drive them. You probably know one, your sister.
Hold me close, hold me tight, make me thrill with delight. Let me know where I stand.
I want you. I need you. I'll always love you. Oh, my heart. Okay. Elvis. This is the hour where it always screws me up. FDA turns to AI to speed up clinical trials. Oh my gosh. So are they saying they're actually better than humans? Might load up another 12 here. That'll be quite impressive. The bid and the ask. About a $3 difference. I need you. Come on, let's get a nice little breakout now. /ES is above the VWAP. Oh, oh. Come on, just a little budge. This thing breaks the VWAP, it's off to the moon. If not, need to get out of the trade. Man, these earnings, they look real good. Yeah, come on. When you look at a 5 minute, man, it seems like it takes forever. Oh. Well.
And India combined. When you think they're so dominant, so the thing is, it's kind of hard. It's kind of hard to keep growing at that rate of users, but I think they go deeper into the interface with everybody they have. They're now a utility. They're part of everybody's life. And so now, if they're able to exploit AI, if they're able to build extra tools into that, they become only more dominant in what's going on with labor productivity in the future and ads and all of it. So I'd like to see them making this investment because they've got to keep up and they've got to continue to dominate.
Right, understood. I mean, Meta has been on an upswing and hit a low recently of 520, and let's say in 1 month it's up 27%. Do you think it still has upside? At the high, it's at 671 today. The high over the year was 796, close to 800. Where do you think it could be headed?
I'm very constructive on really all of them for the rest of the year. It's all about earnings growth, and I think if they're going to be able to demonstrate earnings growth, and you have to kind of separate this cash flow investment versus the earnings itself.
It just keeps teasing here the VWAP.
It's about earnings growth moving forward. I think that we're
Just any kind of spike here will give me a big bucks. There we go.
And RTX used to be Raytheon. Why do you like those two names?
Okay, here we go.
Broadcom is absolutely the picks and shovel.
The old Jim would have not stayed in this trade that long. I would have sold it at 170. Right now I'm up. There we go. Let's do it. Come on. I'm doubling down, man. Come on. Right here, we're at another resistance. So, I mean, if I just get another 47, come on, give me $2. The old Washboardjim would be chicking out right now. I know when I sell this thing, it'll pop again, like I said last time, and it popped. Fucking storming again. Jesus. $170, all right. So we had a breakout of a fallen wedge, and we had a breakout of a symmetrical flag almost to the 100. I mean, there it is. There it is. Congratulations, Washboardjim. God, darn it. The fuck. And 75. What are you in puts for when I'm in calls? I said that to Harley. watch this thing fly now, and I'm going to say, I left $2,000 on the table. I love my family. All of them.
Your account, you're going to be able to move in and out of it. You're going to be able to spend that balance, in merchants globally or online. And I think, that is a trend that we see a lot. A lot of the platforms and payroll providers are now able to do that.
Let's talk more about the acceptance and how it could go into stores. You were talking about merchants. I mean, they should sort of know it rather than having been taught it. I mean, it's sort of generational, too. I think the younger folks may be better at this than a baby boomer, for example, but not necessarily, but maybe. That being said, you talked about regulation, the Clarity Act. We have the Genius Act, now the Clarity Act, and we're waiting for more from that. These ETFs that have exposure to crypto, are there some that you like more than others? Is it a good way to go? And now we're seeing a lot more institutional buying and also central banks buying.
I think here you have to really divide the opportunity into this is an infrastructure play and this is an asset play. So ETFs where you're talking about exposure to underlying crypto assets that have investment potential, things like Bitcoin and Ethereum are obviously very interesting. We've seen a new basket style ETF coming out in Europe that's giving you.
Do you think those could be winners?
No, I think it's a way that if you don't want to take a very strong bet on a specific asset, for you to get exposure to this space and the trends in it as a whole. I also think what we're starting to see is the ability to invest in portfolios of assets that are more at that picks and shovels level, the financial infrastructure of the future. It may be not a volatile asset like Bitcoin or Ethereum, but it's exposure to those companies, the Coinbases, the Circles, these types of companies who are really building the infrastructure. And that is a very different proposition. There you're really betting not on a specific blockchain or a specific cryptocurrency.
And how did you quantify the growth of Wallet Connect from this year to last year? I mean, is there anything you can leave us with a thought when it comes to Wallet Connect?
Last year we did about $400 billion of volume over the network. Based on Q1, we're on track to exceed that by quite a significant margin this year.
Well, she's back down again. I'm out of it. So I'm feeling good.
Oh my goodness. So record year ahead, maybe.
Hopefully.
Okay, Jess. Well, good luck with that. Certainly sounds like you're on track.
No cleavage.
Thank you, CEO of Wallet Connect. I'm so glad you're with us. 400 billion volume last year and on track to exceed that this year. So we will continue to follow up with Jess regularly. Thank you. Coming up, our panel is standing by to break down the UPS earnings. The stock is moving lower. Did have a beat on the top and bottom line, but some concerns about the outlook. We'll be right back.
Some concerns about the outlook. AMD double topping.
Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
I'm going to show you something how to learn. I'm going to educate you. I'm going to educate you. And I think this is going to have to be recorded. I recorded one yesterday I didn't put up on, so I might have two of them I'm going to post. So let's do this. Oh, whoa, bad mistake, bad mistake. Oh, that would have been bad. That would have been very bad. Okay, I want everybody to pay attention. Do I have everybody's undivided attention? Tell me yes. I'm vulnerable. Oh, that's the family. Schwab helped me have babies. Do I have everybody's attention? V-Warper ready? Okay, here we go. I want him. 2 bits. A freebie. And a 4. Hello, my name's Washboardjim. I'm the founder and the trading strategist behind the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. I'm going to give a lesson on how to learn. Exactly, a real simple method that I've used for many years and years upon years. After each trade I make or after each breakout I see, I like to see what I missed, or maybe I can pick up on the second time. Now, you know my strategy deals with chart patterns, moving averages, and being in the now. Being in the now, I've never felt so bullish in my whole entire life. Just something about this time is I've seen so many times a whole lot worse. So I'm sitting here and I just got out of a trade. It took me a long bit, a couple hours, but I finally got out of it. Things looked real bullish to me and things started showing up. So when I'm in a trade, I like to go back and look at what I would have missed or what I could have missed or what I did miss. If that makes any sense, I don't think it does. So I'm sitting here and I'm charting out this fallen wedge. I identified the wedge right at the start. And when I see charts that's starting to look clean, like right now we're pulling back to a previous resistance, we're kind of bullish. But first thing this morning, I scalped this a couple times, and then I got in it again and got stuck. So I went in small at 230, and I started adding on every dip. Well, as I was starting to add on, I went back to grade school and went to my strategy of counting to 3 and 4. If you can count to 3, you can trade with me. If you can count to 4, you can make a lot more. So I ask everybody after every trade to go back and look at the trade, or go back and look at look at that day, like the end of the day. Go in there and start doing a little bit of architecture, a little bit of art, start drawing in chart patterns. So I recognize this fallen wedge with inverse head and shoulders. We have the left shoulder, the right shoulder, and the right shoulder. Oh my gosh. Always clean. This is Jim. May I help you? Kicking It Martial Arts. Are you there? You know what you just did? You interrupted a very important meeting. Now you're live right now, and the whole world's listening to what you got to say. So I'm going to start this over again. And I'm an martial artist too. I'm also a Golden Glove. I challenge anybody in your ring tonight, Hammond Student Center, bring your best man to win. Tell him to put the gloves on and watch me kick his ass. And I'll catch you later. Okay. As I was rudely interrupted, I will stop this recording and do it again. Calm down, Jim. You don't want to hurt nobody. Woo! Brought me back to flashback. Okay, here we go again. Always the second time's better than the first time. Get out your pencil and paper. Here we go again. Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, and I want to give a little lesson that might help you improve your trading strategy, and it's called Back Check What You Might Have Missed, and I do it with about every trade I make to see if I miss something where I can curtail it a little bit into my next trade. I like to predict the future when I'm trading, and I do it with chart patterns, moving averages, and being in the now. Now, we have a lot of bears out there right now. We have ups and downs. I mean, one day everybody's all excited, and then the next day everybody thinks the end of the world's coming. And I don't see it that way. But, you know, things could tighten up and get a whole lot worse, but they're just not as bad as I've seen in the past. So I'm just kind of writing this off right now. So being in the now is a very important part of the trade. And the second part is back testing your strategy. So I've got in this here fallen wedge. I got a lesson on if you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. So I'm looking for the sweet spot in about every trade I can trade or I can find. And usually you see it in chart patterns. This one here, we had a fallen wedge. So I'm sitting here looking at this fallen wedge and I'm adding on. I've already got in the trade because I think we hit a double bottom here and we were going to bounce up. Or maybe right in here is where I got in the first trade. And then it dipped on down on me, and I've been waiting quite a bit, adding on to this trade. This is on a 1 minute time frame. So as we started getting into number 4 down here, number 3, and we had 1, 2, and I used the bodies of the candles, not the wicks. The wicks are confirmation, but I'm using the bodies when I'm calling out these trades. And we had what's called fallen wedge. We have lower lows, and in that lower low, we also created what's called an inverse head and shoulders, which both of these patterns are very bullish. So I'm going down and I'm counting. I'm telling the room, I'm saying, you know, 1, 2, 3, 4, 1, 2, and I think we might have a 3 breakout. We didn't break out here. We pulled back. This is called a sweet spot of the channel of the flag. So I added on one more time to bring that cost that I had in my stock real down because I'm bullish. I see an inverse head and shoulders and I see a fallen wedge. The inverse head and shoulders is a little bit more bullish, but the fallen wedge always, I can almost 99.9% rely on for a breakout. So if you can count to 3, you can trade with me. 1, 2, 3, and then there's your 4 with the wick. Then you got 1, 2, 3, 4. So this was the sweet spot as it starts to tighten up. So then you start getting really ready. If it doesn't break out soon in this channel, it could just dive on you after so many touches. But we were in the sweet spot, which is 3 and a 4. Then we broke out. Then we started creating another flag, and I got down there again, down to where my last entry was at $1. I went, shit, you know. So we started breaking out in another flag. 1, 2, 3, 4. 1, 2, 3. Bing, the sweet spot of the triangle. A lot of people don't pick this stuff up because they don't know how to read charts. So after every trade you take, you want to go back and look for chart patterns and see how much you might have missed, and you can use that into your next trade. Or gives you more confidence. Because like I said, there's a lot of bears this weekend came out and said that we were ready for a big old 2008, 2007 drama in the market again, where we'd have a major pullback. And I don't see that. I'm more bullish now, a lot more, and I was a beginner back then. So I came in at a real bad time in the market where it dropped 50 points under Barack Obama. And then they started writing out the stimulus checks, the Highway Act that went straight to the unions, and just a lot of checks were being sent out. They bailed out General Motors. General Motors was at 50 cents a share. Ford was at $1. Hog was at under 10. There was a lot of good opportunities back there to be in the market. And I took advantage of them times, knowing that I was real new. But I've seen times a whole lot worse than what I'm seeing right now. So I always say go back and back test. Now we see we've got this little megaphone pattern forming right here, a rising megaphone. I'm going to take this trend line off. I got that on the 5-minute. I'm going back and forth, getting hints from people in the room. Hey, Jim, we're about to hit the 63 EMA on the 5-minute. I always call that an exit idea. But after going through these two patterns here, I felt fairly bullish in the trade. And I wanted to stay in the trade. So this was a 63 right here. Now when I'm trading, I'll use the /ES VWAP method. So I'm using the VWAP as a resistance to break. This is on the 1-minute. Once I knew I broke that VWAP, I was sure to go ahead and take profit. And it pulled back on me, and then the second time up, I got out of the trade. But I'm using the /ES for the VWAP because it don't really show up to me on the SPX. It shows up on the SPY. So I also have another chart set up to where I have the SPY and the SPX. It's around here somewhere. Yeah, SPX, and then I can use the SPY VWAP as a support level. So on the SPY, I'm at support on the VWAP, and that means that I could probably bounce here off my support channel that I drew in here previous. So the secret of the story is look for the sweet spot in every pattern and go back and retest and see what you might have missed, because that thing you might have missed might have been a leading indicator to stay in the trade. So I just want to give that, I really go back and I look at everything. I look at the candlesticks, see what kind of breakout we have here. These are all bullish candles. These here are all bullish candles. We have 3 black crows here with a tweezer bottom. If I miss that trade, I had a second chance to get in it with a double bottom with a higher low. If I can count to 3, you can trade with me. 1, 2, 3 on the 5-minute. On the 1-minute, 1, 2, 3, 1, 2, 3, 4, sweet spot. If it didn't break out there, I'd want to take my profit and get out of the trade. But as we broke out, it gave me more confidence to stay in the trade. We had the 9 cross over the 21 EMA. We had the 9 being respected for a good period of time up on the 1 minute. So I'm looking at the little things that turn out to be big things when you're wanting to look at a trade. Now that we're above the VWAP, I even have more confidence than I had before. What was resistance now becomes support off the 63. That 63 here was resistance, 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 resistance. Then that's the red line. So once we broke above it, that gave me more confidence in the trade. I still stayed in the trade after the dip. You know, I had enough confidence on a real bad day to stay in the trade where everything's just pure negative. But the charts are telling me a different story. So I'm asking you to go back and study the chart itself. Look for the candlesticks that cause the reversals. Look for chart patterns and see if they're holding what moving averages, and check the VWAP on the /ES or on the SPY when you're trading the SPX. See, now I'm looking at this chart and what's it telling me? It's telling me that we broke the 200 SMA and EMA. So I want these two moving averages, the 200 EMA and SMA, to become support levels. And as we go throughout the day, we pull back and we hit that 200 right here. We hit the 200 right here. We hit the 200 EMA right here. So we have a triple bottom now on this breakout. This is called a megaphone. This is an open mouth megaphone with a head and shoulders. Megaphones just don't go straight out. They can go sideways. They can go down. They can go up. So the next resistance would be this shoulder line up here at the top. Solid support would have been a triple bottom. If you missed this trade and the trade before that, you could have got in here and scalped a double bottom to a triple top, or you'd come down here and got the triple bottom and run it up to a head and shoulders. The head and shoulders high is up here, so you can still probably stay in the trade. And again, mind you, this is the worst hour of the day I like to trade, but I stayed in the stock because I felt confident. So I'm asking you, after, like this trade right here, 3 black crows, you have a hammer, inverted hammer, a hammer with a long leg doji, another hammer, inverted hammer, all of them are bullish. And here you got another pullback. Hammer, inverted hammer, hammer, spinning top hammer, hammer, tweezer bottom. All them candles are bullish. Tweezer bottom, tweezer bottom. Now, I called this here trade out. I said, we got us an ascending triangle. It looked very confident in this trade right here. This one right here. So I drew out this ascending triangle. And I felt very bullish because I saw this ascending triangle. And then we pulled out of it with a long leg doji hammer right here, which gave me the confidence to stay in the trade. Then we end up forming a rising wedge. So at that same time we formed a megaphone. And we broke out of that 1, 2, 3 again, the sweet spot. Counting the wick is number 4. 1, 2, 3. So we got we're in that sweet spot again, and it broke out. Then it came back down again, then you got a triple bottom. You held that megaphone that you created earlier today. So if you were in the trade and you got stuck, you weren't paying attention, you could have added a little bit more here and took this tweezer bottom off that third support, off that megaphone, and kept you very bullish. So I'm just constantly reading it. I think every chart tells a story. It can tell you either you're bearish or you're bullish. We had a golden cross where the 50 SMA crosses the 200, where the 50 SMA crosses the 200 SMA. That's called a golden cross. That means that we could have more bullishness in the trade. So I can just keep seeing more and more things as I go through this chart pattern. So that's the name of the game. Go back and retest what you missed, and you'd be amazed how much that improves you down the line. My name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. Have a great day. Lesson over. Okay, I'm going to ask you a question. From 1 to 5, did that lesson make any sense? There's hailing again. Fuck. What a day, man. It's cat and dogs out there. Chicken eggs falling from the sky. I got a 5, 5, 5, 5, 5, 5. Rumpelstiltskin, did that help any from 1 to 5? YouTubers? Do you feel like taking another trade? No. No. I would have took this triple bottom. I would have took that. Sneak and snake trade strategy. And I want to give a little lesson that might help you improve your trading strategy. And it's called Fact Check What You Might Have Missed. And I do it with about every trade I make to see if I missed something where I can curtail it a little bit to my next trade. I like to predict the future when I'm trading. And I do it with chart patterns, moving averages, and being in the now. We have a lot of bears out there right now. We have ups and downs. I mean, one day everybody's all excited, and then the next day everybody thinks the end of the world's coming. And I don't see it that way. But, you know, things could tighten up and get a whole lot worse, but they're just not as bad as I've seen in the past. So I'm just kind of writing this off right now. So being in the now is a very important part of the trade. And the second part is back testing your strategy. So I've got in this here falling wedge. I got a lesson on if you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. So I'm looking for the sweet spot in about every trade bit, adding on to this truck soon in the rising. These are all bullish candles. These are here all bullish candles. We have 3 black crows here with a tweezer bottom. $10 AMD. TSM 12. Intel stock hits a snag. What's dragging it down? You know what's dragging it down? That it's not as badass as NVIDIA or AMD, TSM. That stock's had a good run. It's up about 300%. This used to be the best stock ever. From 1897 all the way to $87. So that's 400% increase in a matter of months. I think it has something to do with Elon. This OpenAI, I don't understand. Well, it's like the big daddy of everybody, and then they're disappointed with OpenAI, and they say too much spending in AI, and then spending's up. Companies are invested 65% more than what they thought. They've been calling a bubble on AI for about a year now. And they've been wrong. And when I say they, I'm talking about the fat cats. I mean, if you'd listened to them, you wouldn't be any of these killer stocks that ran up incredible this year. AMD's another one, $191 all the way to $352, $353 in a year. They said we were in a bubble. You would have missed that run. Damn, Marley, you got some big tits. I don't know why they let her wear that on this commercial. I mean, it's very unprofessional. Unless they wanted to catch my eyes, and they did. And it throws me off every time I see that commercial. AMD coming up to double top. Got a head and shoulders. Right shoulder just hit. No, I wouldn't. That would have been a good trade right there. To the top of that megaphone. Triple top. 1M, 2 bits, 3B. What are the options at now? Wow, this PX dropped down to 105. So I got out in time. And it dipped down to 80 cents here. Oh, Randy. Ooh. We're in power hour.
believe in the technology.
Year over year on revenue that also climbed about 12% year over year. Now, their unit case volume rose another 3% globally, easing some of the concerns about demand elasticity after price increases, and they raised their full-year earnings growth outlook to 8 to 9%. So strong performance in some of their more premium brands was led by things like Fairlife as well as Coca-Cola Zero Sugar. Margin expansion also was driven by an increased operating leverage and some currency tailwinds. Now, income consumers do still remain pressured, which was of mention on the call, requiring more promotions and more affordable pack sizes. And so juice businesses also did see a decline for volume, partially offsetting some of the strength.
The leader of diabetes.
Back from some of the gains of today's session, but I would still say a 4%.
Everybody I know that drinks a big gulp is fat.
Conditions signals not only the impact of tariffs that does remain fairly mitigated at this point, but also the fact that aluminum prices and some of the ongoing steel and aluminum tariffs don't seem to have at least too much of an impact on their top and bottom line numbers that were, again, healthy on a year-over-year basis for their growth story.
Yeah, I mean, the 4% gain is going to sound even better when I tell you who we're talking about next, and the double-digit downside move that we are seeing in Spotify today. Although they also
near pumping spot yesterday.
They did. I mean, they still showed
bring the jail guy back on.
Profitability, but this was obviously a negative reaction that we've kind of discussed all day long. First quarter earnings did beat expectations by a pretty decent margin. Operating income also hit a record. Revenue rose about 8% year over year. That figure was not as enthusiastic as earnings, but still relatively in line. Monthly active users still reached 761 million. That was up 12% year over year and above guidance. Second quarter operating income guidance did miss expectations and implied a step down from what we saw previously for their first quarter profitability. But record profitability, again, driven by some of their price increases, was still a huge win. Podcast economics also improved, and cost discipline was at least a bit higher. Premium subscribers still rose about 9%, showing that price hikes did not necessarily hurt demand. But at the same time, second quarter premium subscriber guidance of 299 million missed street estimates that called for roughly over 300 million, and advertising support revenues declined by about 5% year over year, highlighting some continued weakness that they're facing in the ad market. And so I would say that this to me seemed more of like a report where we were hoping for premium subscribers, which have driven so much of their growth for years and years now. That number coming in disappointing, and also then a more weakened outlook does signal that yes, we are seeing some impact from price increases, but I also think this is a broader streaming environment that is so saturated right now. I know that it's not necessarily at all for their business model like a Netflix, but this is something that you're seeing across these subscription models where they're not necessarily growing at the same rate and getting punished for it. And so where I compare this is the move post earnings from Netflix, both, I mean, seeing a substantial repricing on the day.
And I had Seth Schaffner on Trading 360 earlier, and he was talking about, yes, that subscriber growth number, that 300 million, was a slight miss. But there are also concerns, like you mentioned, similar to Netflix, that they are planning to add another premium pay level. And he's worried about that price hike and what that means, knowing that they're not meeting that subscriber volume that the street was already looking for. What happens then when we raise those prices? But Evercore ISI putting out a very interesting note, maintaining their bullish stance, outperform rating, $650 price target, so we're more than $200 off where we are right now, but with a pretty strong thesis behind it.
Yeah, and I will say that there's also, I mean, there's been several analyst notes we've seen today that have highlighted the fact that, hey, this is perhaps a buy the dip opportunity. I mean, still highlighting the strong demand, despite, again, some of the more tepid nature of share price today. But overall, if you look at, like, again, the broadly monthly users, those were higher. We did see, I mean, some substantial improvements as far as operating margins. And so I've also seen notes that do actually maintain a fairly neutral, if not bullish stance. Overwhelmingly so, the conviction on this name from the sell side is still fairly optimistic. Just having an uncharacteristic year for Spotify that was at one point like somewhat of an outlier in the streaming and broader subscription space.
and Evercore saying aggressively buy on this dip was in the note. Usually we don't see language quite like that in the notes.
On a sell-off day.
But they thought it was an opportunity here at Evercore. Also seeing a bit of a sell-off on UPS's numbers. Not as significant. They were down about 3% last I looked.
Yes, and so this was more of a volume story. So we did see they executed relatively well on cost control, but soft volumes and a lack of upside to guidance did keep investors more sidelined, at least for this move today. First quarter earnings did beat expectations. Revenue of $21.2 billion also topped estimates. Revenue, though, dropped, right now slightly on a year-over-year basis as package volumes did remain under pressure. U.S. domestic revenue also contracted another 2.3%. International revenue fell another 3.8%. And so their cost savings of roughly $600 million that they achieved previously did highlight this network efficiency initiative, and revenue per piece actually rose by about 6.5% in the United States, reflecting this pricing discipline and also mix improvement. Now, international margins also were still strong at 12%, but volume trends have been weak for U.S. domestic parcels, limiting some of their revenue growth, and operating profit and margins also do remain very much below year-ago levels. Management did not raise their guidance either, reinforcing a more cautious demand outlook. So 3.3% move to the downside here. Again, some of these moves feel almost like a win on the session when you look at the mass selling we're seeing in Spotify that, frankly, was a cleaner report.
Yeah, it was, but an interesting look, and UPS also offered that very conservative, maybe even use the word cautious guidance, saying they just didn't have enough information to do anything but reiterate what they had already said. And I think maybe some of that is this, but like you highlighted, a 3% move to the downside on a mixed report is certainly better than we've seen other companies take in the wake of a similar situation this earnings period.
Yeah, absolutely. I would say the 3% move to the downside feels like you didn't completely reprice your trend. You're still intact. And a lot of these logistics companies, you could see why they'd be facing scrutiny right now. But I think that, again, a modest move to the downside here feels like the street received your results relatively well.
All right, well, here comes one with a sort of similar setup, but a bigger move to the downside, Corning.
Okay, and so this name, I only looked at the numbers. This is a great example of why you cannot predict earnings moves. Solely looked at the numbers this morning, wrote my full report out, and I legitimately introed the stock as being higher on the day. And it's not, frankly. It's selling off here, but we're down almost 8%. And so that just goes to show, the mismatch is sometimes what the fundamentals depict versus what the street really resonates with. And so obviously, price is king, and we are seeing the street take a bit more of a definitely bearish stance today, despite the fact that we saw overall better than expected results. Earnings of 70 cents a share, well above, or slightly above, actually, analyst estimates of 69 cents. Core sales rose 18% from last year. Optical communications was a clear driver of that revenue growth, with 36% year-over-year growth, benefiting from all things AI data center demand. Now, some overall bullish takeaways: strong acceleration tied to AI infrastructure, also with some of these multi-large year hyperscaler agreements, which includes 2 new deals similar in size that do, really also tied to Meta and the $6 billion contract. Optical communications, now their largest and fastest growing segment, really reinforcing their leverage to generative AI-driven fiber demand. Core earnings also rose another 30%, and solar revenues were up 80% year over year, signaling another potential leg of growth for their, right now, operational issues as we see that continue to stabilize. And so as far as what did not go well, second quarter revenue guidance was modestly below consensus. That did hurt sentiment after a really strong year-to-date run. Their display technologies and specialty materials only saw modest growth as consumer electronics and smartphone demand remained soft. And the stock valuation had expanded significantly going into this print, which is perhaps why we're seeing more of that downbeat tone today. Because I would have said this was as solid of a report as any, with the one caveat being, of course, some more really muted guidance. Does then set the stage, though, for the rest of tech earnings this week to have to be, you have to be basically on your A-plus game as far as forward-looking expectations, because, again, there was a lot to like in this report, especially because they're diversifying away from, say, like a smartphone glass maker into more of the fiber optics of data centers. A huge business pivot that has been received well up until today. So still not before we're on the year, taking a bit of a breather, though, for that rally.
I was hoping we were going to get some hint about their ultra-thin glass for a foldable phone from some company that may have one rumored to be coming out that we're hearing from on Thursday. But no hints in the report. Thanks to Jenny Horn for breaking all of that down for us. I do want to check back in with Sam, though, for a look at what we have coming up in the rest of the show.
Well, Molly, we're going to look ahead to tomorrow's Mag 7 earnings, discuss what we can expect from the Fed and where stocks can end up by the end of the year. Market on Close will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Market on Close. I'm Sam Bartas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. And these markets have been under some pressure today, no doubt, because of these higher oil prices in triple digits. There seems to be some uncertainty around what is happening in the Strait of Hormuz, with Trump dissatisfied with Iran's proposal here to reopen it. And of course, we have the added disruption with the Wall Street Journal OpenAI story about falling short of meeting its targets. And so that's very much weighing on the tech trade. And so this is why we're seeing the NASDAQ 100 under the most amount of pressure here, 0.9% lower. Russell 2000 also down 1.2%. Suffice to say, though, the Dow Jones, not as deep losses as we're seeing in some of these other major averages, and that is perhaps largely thanks to some of these heavyweights, or at least blue chips. We've had some nice earnings by the way of Coca-Cola, as we just walked you through as well. The S&P 500
Here's a
just down
trading strategy here.
So we're looking like we're on course to snap these back-to-back record highs now for the major averages, the S&P and the
So as we come down this snake,
much got the tech trade under pressure from some of the concerns coming from this report around the AI compute demand and also
snake breakout, pullback, higher low. Boom. So I'm drawing up this snake. This is Tesla. Tesla had a huge breakout this morning. Landed on my 372.02. There's your snake. So I'm watching it. Oh! Jim, we broke out. Wait for the pullback. Wait for the pullback. And wait to see what chart pattern you pick out of the pullback. Don't take it now. You're going to get stuck. Patience. Oh, what do I got? I got a left shoulder, right shoulder, wick. Body, 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 body. You got a head and shoulders. Snake, breakout, pull back. I take the trade. Boom! I'm out of the trade. Double top. Plenty of chances to get out of that trade. Took it right here off the right shoulder. So the chart pattern was inverse head and shoulder and a fallen wedge. Take and put your body right here on the body. If you can count to 3, you can trade with me. 1, 2, 3, broke out. Pulled back again. Boom. So we had an inverse head and shoulders and a fallen wedge. Same pattern that I took on the SPX that got me bullish in the trade. Snake, breakout, inverse head and shoulders, fallen wedge. AMD. So I do this all day long. I'm going over trades that I didn't even take. So we got an inverse head and shoulders. Left shoulder, right shoulder, head. Snake, breakout, pull back, boom, double top. We got a fallen wedge with another inverse head and shoulders. So we got a head and shoulders, fallen wedge off the 200. So we got inverse head and shoulders, snake, breakout, pull back, boom, to double top out of the trade. AMD. We got a rising wedge. Breakout, pull back to the resistance of the rising wedge. Let me think another one. Verizon, VZ. We've got a triple bottom. We got an inverse head and shoulders. We got a two-headed snake. Left shoulder, head, shoulder, 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 head, shoulder, shoulder, shoulder. So we come in here, we have the sell up, breakout, pull back, boom. Four black crows with a tweezer bottom on the 5 minute. One minute, snake, breakout, pull back to the 200 out of the trade. Snake, breakout, inverse head and shoulders. So let's go back to the yearly candle. First, we'll look at the SPX. There's the weekly. So yesterday we had another breakout. Oh, dummy. So what do we got here? This is a bearish harmony with a red candle. With 3 white soldiers, we created a new high yesterday, and we created a new high today. So we're still but this is a bearish harmony. BEAR. Bearish harmony. It's that candle inside of a red candle inside the other one. So we got the green candle with the body of the red one inside the other one with a new high. So I would expect it to even pull back more, maybe 70, 60 to the double bottom on this last week's high. Not much of a correction, but that's bearish harmony. So, get into my mind here for a second. I'm back testing everything. I go back 3 years. 3 years ago, this thing was at 60 bucks. This is AVGO. We had Trump deranged syndrome here back to the 100, and it bounced up from 140 up to 400. So over 250% increase, 275. Trump deranged syndrome, and we landed on the 63 for a strong buy. 3 white soldiers. Consolidated period after 3 white soldiers. Way overbought. I wouldn't be surprised if this thing dropped on back down to the 50 and be a strong buy. Things are way overbought. A lot of stuff is way overbought. So you don't want to chase 3 white soldiers and jump in a trade after 3 white soldiers. You want to wait for the consolidated period, which is this week. If we get one more big knife and pull back to the second soldier, I would consider taking it off what would call a head and shoulders support. Pull back to that right shoulder, right on that at 370. So I'm going to set an alert just above it. I go back 5 years. Just 5 years ago. This thing was at 41.50 in 2022 when I said buy into the market. I said anything. You could take about anything during the Biden regime back in 2022 because we pulled back 30%, 30 to 40% in the market in 2022. We only pulled back 10% under Trump. So I'd look at 373. I'd set my alert right at 370. I should even raise it up just a little bit because that looks almost precise. I'm going to raise it a little bit above that red candle there. This one right here. $376. It's about a $24 dip. Now, if I was day trading it, scalping it, I might have a different perspective on it. But if I wanted to swing it, I'd wait for 375. What one was I looking at? Was it AVGO? Yeah. Now, if I wanted to day trade this or scalp it, I got a yin yang at 376. There's really not much of a place in here but that 376. Right here maybe, but that's high or low. Nah, I'd wait. I'd wait for another dip. I could take off a month. Comey reported got indicted by grand jury for the second time. Yay! Yeah, put the car in the garage. I got some hail damage. Man, it's been one heck of a storm. Always clean.
memory chip type companies here. You know, if you think about it, pretty much everything electronic needs memory.
Talking about chart patterns, moving averages, and especially being in now. Now, there's a lot going on this week. So I'm going to show you a trick play here that I'm a great chartist. I want to show you how I charted up the trade I took today and how important it is to recognize patterns. Sometimes you have more than one pattern in a pattern or outside of a pattern. And I'm going to show you exactly how I chart a megaphone when I feel like I see another pattern that needs to be mentioned or alerted to. But we've got lots going. We've got great earnings coming on this week. We've got a lot in the news. We had the assassination attempt with Donald Trump, which makes it number 3. And just crazy place, crazy times we're living in right now, and I don't think it's going to get any better. So that's just the way it is. You got to be in the now. So I was sitting here charting out the SPY and the SPX, and I went to the SPY and I was looking at the SPY, and I noticed a megaphone pattern. I traded the SPX, and now we're at the VWAP here on the /ES, so we're coming down to a major support level. And we had 3 white soldiers on that on the /ES and also here on the SPX. This is a TTM trend chart. So when I'm typing out, let me get here. So this morning I started noticing a megaphone pattern. And I went from this body to this body and drew that bottom support. And we hit that wick right there. So that's a key indicator right at open that we could maybe come back down and hit that again after that breakout. So this was a quad. If you can count to 4, you might learn to make a little bit more. And if you can count to 3, you can trade with me. So I drew this here megaphone. Now this is what I want to teach right here. I could have took that trend line and put it to the top of that there bar. But what I noticed was an inverse was a head and shoulders. So when I jumped in this trade down here on the bottom of that megaphone, I drew this trend line straight across and created the left shoulder. And then after we took the trade, there was a couple hammers that got me in this trade on the SPX. And then we had the 3 white soldiers for an exit idea. I got out a little bit soon. If I would have held on a little bit longer, I could have probably got another $150 out of the contract. But remember, the key secret is looking for other patterns. Once I noticed the megaphone pattern, I spotted this here head and shoulders. So I went ahead and drew my line on the shoulder line of that head and shoulders, which now becomes resistance. So you have the bottom of the entry right here, which was an easy call out, and I got in a little bit early, and I had 1 contract. Once we hit that support level, that was my final time to get into the trade. So I ended up with 2 contracts and did pretty good on that trade. Within 3 minutes, 2.5 minutes, I was, 5 or 6 minutes, I was out of that trade. But always remember, look for patterns. This was a good example. See how we run up and we hit that right shoulder line? We got the left shoulder, head, and then I just assumed maybe that we could come up and hit that right shoulder 1 more time. And that's exactly what we did for a good exit idea if you stayed longer in the trade. So I'm Washboardjim with a sneaky snake trading strategy, trying to teach people how to trade, where I talk about chart patterns, moving averages, and being in the now. Have a great day. Hello, retail traders.
You mentioned breadth, obviously, as you say, a bit of a defensive trade
T-mess.
in here today. What do volumes look like today, KG? Because I know yesterday looked pretty weak. There was a lot of narrowness in this market as well. But what about today?
I would say volume, for the most part, actually are staying within the median range. You do have a lot of activity for a stock like an NVIDIA or even a Microsoft or Oracle. That's leading a lot of the volume for the S&P 500. But if you're looking at the overall S&P 500 total composite, I would say it's for the most part relatively average.
We got Humana in the morning. Tonight we got Visa, Mondeleza, so I'm going to look at a couple things here. I want to see what's earnings tonight. So we got, tonight's Tuesday night, we got Robinhood. Robinhood got a bull flag with a fallen wedge. We got Seagate, STX tonight. That's why they were charting this thing. And this one's overbought. Spotify was this morning. We got Visa. I figure Visa might have some issues. Is Visa overbought? Let's look. 3-year. No. Visa's not overbought. It's come down to a decent support level. So it's already pulled back. We got Mondeleza MDLZ. This one's cheap. This one's not overbought. No, this ain't overbought at all. We got Snake breakout pullback. It'll probably get up to 60. Tomorrow morning we have Sophie, Humana. Not much of a morning. ABBV. Then tomorrow night's the big night. I wouldn't trade much until tomorrow night. I think that'll be the that'll be the decider. We got Microsoft, Amazon, Meta, Alphabet, Ford, QCOM, Chipotle. I mean, those are all major. Chipotle, meh. QCOM's been pumped. It still has room to climb. The double bottom was a good buy entry 4 weeks ago. Double bottom. All right. Well, I think that's it. I've had a good day. It's been a long day, but go back and retest all your trades and see what you might have missed. You know, I'm sitting here looking at QCOM with 3 white soldiers at the 50. So that's like a dead-end street. Earnings alert.
This is their fiscal third quarter. EPS coming in at $4.10,
Seagate.
better than the expected $3.50. Revenue for the quarter coming in at $3.11 billion, also better than the expectation for $2.95 billion. The adjusted operating margin at 37.5. Estimate was only looking for 34.8 there. Now they are saying here that they're seeing their fourth quarter EPS coming in between $4.80 and $5.20. The consensus was for $3.97, so perhaps even $1 better than that. They had a beat. They've got a guidance beat here.
So this is something else I just got off.
Higher. KG, this is one of our, first real looks at the AI infrastructure build out and if it has legs and how real it is. And the market seems to like what they're seeing.
And market's been telling you different. All these fat cats have been saying that it's these are way overbought. That AI is way overbought. I'm trying to tell people it's a new phenomenon. It's a new way of life. It's like when the internet hit. Everybody joked about the internet. They thought it was a joke. And then all of a sudden, everybody wanted to open up an internet company. Bitcoin, same way. All of a sudden, you had all these pennies flood in here. Just all kinds of companies with just the word Bitcoin in it. Kodak is a good example. They would take, companies that were failing would take the word Bitcoin or coin and put it in their portfolio and say that just to get a big bump. EV cars, the same way. I mean, Rivian was at $2 and it ran all the way to 65. Tesla ran to 2,200. It was not a phenomenon. It was a government-built strategy. The government wanted you to drive only EVs, nothing else. The king was telling you that you were no longer going to be able to drive a gas car until we had a rebellious occupier come in and say, hey, you don't have to buy an EV car. I'm not going to tell you to buy an EV car, even if you can't afford one. It's the same exact thing. So when they're shouting king, they were the king themselves under Biden, trying to dictate your lifestyle. Yes, you will accept men in women's bathrooms. Yes, you will accept men in the boxing ring with women, if you like it or not. Although it's against every moral standard you have. But I just see a lot more stuff happening with AI more than what you could probably ever believe. It'll lead into something else, then it'll lead into something else with the spirit of AI behind it. So back when Trump took office, all these companies' forecasts were very bearish. All of them. They didn't have any guidance. They wouldn't give you any guidance. And I was telling you back then that this was bullcrap. That this was, don't listen to these people about these tariffs. And we've had one heck of a run since. We were in 10 wars. We had 4 genocides going on. I was more concerned about that than the tariffs themselves. And they've stopped. Stopped every one of them wars, stopped every one of them genocides. But they were wrong with their forecast, is what I'm trying to say. They wouldn't come out and give any forecast. And now they're giving forecasts, and they're calling doom and gloom on some of these companies. I don't know what the next year's going to be like. I'll tell you what, the next year, it's going to be great. We might finally have peace in the world for the first time next year. In my lifetime, if we just get Iran, who have been terrorists, had terrorist proxies in all them foreign countries over there. This war has been going on for thousands of years. That's all they know how to do is fight. And they just die off. So Mona Lisa looks good. Starbucks, what they got earnings? Oh, I didn't even see that one. Oh man, I didn't know that one. They raised guidance. Starbucks beats. I bought a Starbucks this year, or last year. No, I bought one this year at Mineral Drink. And last year I bought the Christmas drink. And they got a new CEO. Starbucks made a big mistake. So back to 120 maybe. That's been the yearly resistance about every other year. I personally can't hardly drink any other coffee except what I grind. I mean, after you drink grind coffee, it's just nothing else is better. And when I retire, I'm going to get me a little roaster, and I'm going to roast my coffee. If I can find some good beans. But, Starbucks needed a new CEO. So did Disney's got one too coming out. Disney's had a solid support. If I was to go long in this stock, I would do it. Bounced off the 200, bounced off the 200, bounced off the 200, bounced off the 200. So I'd go to the 20 hour, and I'd see if there's something in here. This is the only spot I see right now, right under $100, 97.90. But now's the time not to be swinging stocks, because we had such the huge run from the last bottom. Now this, oh, that's Disney. I'm gonna say that don't look right. This here's a bearish candle. It's a bearish setup right there. I'm going to see what we do tomorrow. I'm looking for a pullback. After this week, if this candle stays like this, unless it breaks out again, well, I'm going to go. I think they're putting in 2 new thermostats. One in the computer room. They've changed the filters. And another one in the exam room. So I did a couple of videos, the one yesterday about the megaphone, how to chart in a megaphone, if you see other patterns. Yesterday on the SPY. It's so easy. Once you study chart patterns, your job is so much easier if you want to trade like me. But yesterday we caught this bottom. God darn it. Why is this so hard to do? What the fudge? Washboardjim with a sneaky snake trading strategy. I love talking about chart patterns, moving averages, and especially being in the now. Now there's a lot going on this week, so I'm going to show you a trick play here that I'm a great chartist. I want to show you how I charted up the trade I took today and how important it is to recognize patterns. Sometimes you have more than one pattern in a pattern or outside of a pattern. And I'm going to show you exactly how I chart a megaphone when I feel like I see another pattern that needs to be mentioned or alerted to. But we've got lots of we've got great earnings coming on this week. We've got a lot in the news. We had the assassination attempt with Donald Trump, which makes it number 3. And just crazy times we're living in right now. And I don't think it's going to get any better. So that's just the way it is. You've got to be in the now. So I was sitting here charting out the SPY and the SPX. And I went to the SPY and I was looking at the SPY. And I noticed a megaphone pattern. I traded the SPX. And now we're at the VWAP here on the /ES. So we're coming down to a major support level. And we had 3 white soldiers on that on the /ES and also here on the SPX. This is a TTM trend chart. So when I'm typing out, let me get here. So right this morning I started noticing a megaphone pattern. And I went from this body to this body and drew that bottom support. And we hit that wick right there. So that's a key indicator right at open that we could maybe come back down and hit that again after that breakout. So this was a quad. If you count to 4, you might learn to make a little bit more. And if you count to 3, you can trade with me. So I drew this here megaphone. Now this is what I want to teach right here. I could have took that trend line and put it to the top of that there bar. But what I noticed was an inverse head and shoulders. So when I jumped in this trade down here on the bottom of that megaphone, I drew this trend line straight across and created the left shoulder. And then after we took the trade, there was a couple hammers that got me in this trade on the SPX. And then we had the 3 white soldiers for an exit idea. I got out a little bit soon. If I would have held on a little bit longer, I could have probably got another $150 out of the contract. But remember, the key secret is looking for other patterns. Once I noticed the megaphone pattern, I spotted this here head and shoulders. So I went ahead and drew my line on the shoulder line of that head and shoulders, which now becomes resistance. So you have the bottom of the entry right here, which was an easy call out, and I got in a little bit early, and I had 1 contract. Once we hit that support level, that was my final time to get into the trade. So I ended up with 2 contracts and did pretty good on that trade. Within 3 minutes, 2.5 minutes, I was, 5 or 6 minutes, I was out of that trade. But always remember, look for patterns. This was a good example. See how we run up and we hit that right shoulder line? We got the left shoulder, head, and then I just assumed maybe that we could come up and hit that right shoulder 1 more time. And that's exactly what we did for a good exit idea if you stayed longer in the trade. So I'm Washboardjim with a sneaky snake trading strategy, trying to teach people how to trade, where I talk about chart patterns, moving averages, and being in the now. Have a great day. Just in case you didn't know this, I watch every video I do. Sometimes I watch them once or twice to see if I miss something. I'm always back checking. Now watch this. This is yesterday. So I'm going to take and go to that shoulder line. Look right where we closed up at the end of the day. Right at that shoulder line. Clean trade, and another clean trade. Just off. Not now. If I'd have put that megaphone, I'd have been way up here. But left shoulder, right shoulder, and right shoulder. Head and shoulders is a strong resistance if you're under the shoulder line. Once it breaks the shoulder line, it becomes a solid support, and then you can stay bullish. If it breaks the shoulder line and it pulls back and hits that shoulder line, that's when you want to might take the trade. But it depends on what time of day it is. But yesterday was a real good day. Today was a good day. I just had to stay in a trade for a long time. I had to come and go. You know, I wasn't too worried about it, because I've seen times a whole lot worse than what we're living right now. There's a reason why Trump got elected, and that was to close them damn borders. It was getting way out of hand. Letting every Tom, Dick, and Harry come over the border without being vented is just crazy, especially during COVID and when you're in 10 wars and 4 genocides. It's the craziest thing I've ever seen in my life. I love immigrants, but I love legal immigrants. Liberals said we needed somebody to go out and pick the cotton. I'm going, what? You need someone to go out and pick your radishes? It's the craziest thing I ever heard in my life. I'm going to get on out of here. Looks like coin had a big sell-off at the end of the day. I'm going to find my penny watch list. See if we had anything in pennies today. I didn't even watch pennies today, but buying's back to 85. Burl, B-U-R-U's been running pretty good. Another breakout. CRML is another one that I called out. Closed right into the end of the day. AMC is still holding up at 164. I had called 157. We hit that right on the T on my pullback. GoPro is another good one here. And what was it, Dash? Called out Dash yesterday. So that ain't Dash. Was it Dash? No, it ain't Dash. It's what the hell was it? I gotta go back and look. Snap. Yeah, I gotta watch Snap. Okay. Well, That's it. I'm going to get out of here. Everybody have a good day. I would not be swinging stocks right now. Not when you have so many people out there calling a bearish market. We've had the greatest run that I've seen since I've been trading in the last three weeks. Sometimes when things go up too fast, they got to consolidate. I called the bottom. Now I've called the top. And these so-called strategists on these channels have no clue what's going on. I mean, I listened to CNBC here. This one. Bubble, bubble, bubble. I heard bubble 3 times this week already. They've been saying it for a long time, and all we do is keep going up, 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 up. They're really worried about the AI. Too much investment in AI. So I'm going to get out of here. And we'll catch you later. One day, one trade at a time is your best bet right now. When I'm calling bubble, a little overbought this week. I'm looking at charts. I'm just going 300 or 400 or 500% in a year. They called MU out yesterday to go to 600, and I said, don't do it. Last time they did it, we had a big tank. And again, happened again today. I just killed a bug. I don't know what kind of bug it is. Donut. Oh, car. There was there was a car one, some car yesterday. I can't remember what it was. Always clean as Jim.
Hey, Jim.
Yeah, buddy.
Did you already lock the mechanical rooms back up upstairs?
No, but I will.
I was headed back because I was trying to get your parts, but they said I got the wrong model. So
Do what again?
I was headed back over there. The supplier said I got the wrong model number, so
Okay.
I'll Battlefield and...
You talking about the upstairs?
Yes, sir.
Yeah, I'll run down there real fast.
Okay, you think it's locked back up?
I don't know if they're locked back up or not, but I'll go down and check.
I need the mechanical room on the right.
Okay.
Okay, I'll be there.
Okay, we'll catch you later.
Okay. Thank you.
Yep.
Bye-bye.
Well, I gotta go. I'm gonna lock her down. Let's have a good day tomorrow.